Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London with Francine Lacroix in Rome. The cash trade is just it's just a couple of minutes away, in fact, a few seconds away. Here are your top headlines then. Rate hike bets ripple, treasuries resume their declines, but stocks get a boost from earnings. Apple surges in after-hours trading as it blows through estimates and supply chain concerns, posting record sales. Plus, LVMH posts record annual sales as well as customers snap up couture and cognac, cementing the group's rebound from the pandemic. Let's check in then on the futures. Europe pointing to range-bound as a picture that we're seeing here in Europe. But let's not forget, there has been a divergence in terms of the performance between European equities and the S&P stateside this week, particularly in the last 3 days, Tuesday till to Thursday. You've seen gains of close to 3% across European equities, losses of around 1% for the US, that divergence. As we look again and weigh up the picture when it comes to earnings, Apple coming to the rescue to some extent and assuaging some of the concerns around supply chains with that smashing set of data and revenue, of course, and sales in terms of the earnings for Apple. But of course, alongside that is the continued adjustment to this more hawkish Fed as money markets pricing almost 5 hikes for this year. The markets in the UK opening down 0.2%. The Spanish IBEX is flat. The CAC 40 is gaining 0.3%. We had some GDP data that came in above estimates for the fourth quarter for France. Again, that economy has been on solid footing, and it seems to be setting up Emmanuel Macron to have decent prospects at the elections and the vote that is coming up in that country as well. We'll see if that gets and becomes sustained. You're getting pictures and data across the European space. It's going to build out that economic growth outlook for the Eurozone and the implications for the ECB. That is the picture then, again, as we weigh up the implications of earnings. LVMH will be playing into that, certainly with decent earnings as well for that luxury company. The future stateside, we're looking at Nasdaq because, of course, that is where the volatility has been most acute as we adjust to these higher yields. And by the way, the yield curve flattening is continuing. It is the front end that continues to move up in terms of the yield, and the sell-off there continues. You're looking potentially at the worst month, by the way, for Treasuries since 2016. The future's looking to gains of 1% from the Nasdaq. Again, Apple is part of the story there. Bloomberg Dollar Index is up 0.1%. You're looking potentially at gains of 1.5% for the greenback. The implications for emerging markets is something we can discuss. At 121, that's your US 2-year, and Brent above $90 a barrel, gaining 1%. There's the geopolitics. There's the fact that OPEC members cannot produce enough amid growing demand, and what that means for the inflation picture as well, and the challenge for President Biden as he faces up to the midterms, inflation front and center for the US leader. Francine, you are in Rome. It remains beautiful, of course. I have a question for you, because I read about this for the first time yesterday. I didn't realize that the candidates for the Italian presidency are not meant to put forward their candidacy. They're meant to be reluctant to put their names forward. They're not meant to talk about it, apparently. Am I getting this wrong? It sounds like an idiosyncratic part of the election process there when it comes to the presidency in Italy.
Yeah, so look, historically, Tom, it's very clear that actually they've always chosen presidents, so far all men, that have been bipartisan or certainly not from a political background. So usually they take them from either former jurists or judges. Sometimes they come from like former diplomatics. But that's why it's so secretive, is actually you don't have a list of candidates that could be president, which is why it was so surprising that Silvio Berlusconi put himself forward. Then, of course, he said he was no longer interested. But frankly, when you speak to insiders, he never really stood much of a chance. It is one of the first ones, the first times that you have Mario Draghi, the prime minister, that could become president. But you're right, the rest is shrouded in secrecy, and it seems that the names are also changing every 2 hours.
Okay, and it seems like the incumbent now, some would argue, is better positioned, Mattarella, to potentially get that presidency. But I know you've been watching all this on the ground, and Fran, doing your bit for the local tourism industry as well. He doesn't want it. So yeah, what happens there?
No. Yeah, so Tom, just on that, and this is something that we were looking at 6 months ago, that there could be some sort of secret agreement between Mario Draghi and Sergio Mattarella, who's currently president, where Mattarella would stay for another 2 years, of course, wait for Mario Draghi to finish his job as prime minister and then take over. But we've heard over and over that the incumbent does not want to stay on. He was also flat-looking, actually, in Rome just a couple of weeks ago, which sent the media into a spiral of he does definitely not want to do a second term. So that is something that we need to keep an eye on, but very unlikely. And I have been helping and supporting the local tourist shop. I mean, I had one woman who was almost crying. She was so happy because she hasn't seen a tourist in about 2 years, Tom.
Wow. It's worth following Francine on Instagram for that backdrop of what is happening in Rome. She posts a lovely photo of herself with one of these tourist T-shirts. So Francine stepping up, doing her bit for the tourist industry of Rome. Let's get to the business flash now with Laura Wright. Laura.
Thanks, Tom. UniCredit has posted fourth quarter revenue ahead of estimates on higher income from fees and lending. The Italian company joins rival Deutsche Bank in driving gains to the top line, while seeking to keep a lid on wage costs amid the boom in deal-making. The revenue gains are a boost for management plans to return almost 3.8 billion euros to UniCredit shareholders in the coming months. LVMH has posted record annual sales with revenue of more than 64 billion euros, topping the previous record set back in 2019. The gains by the French group, which owns brands including Tiffany, Sephora and Christian Dior, exemplify the V-shaped recovery experienced by much of the luxury industry, underpinned by recovering economies and soaring asset prices. Robinhood shares have tumbled in post-market trade after revenue and outlook at the US brokerage missed estimates. The platform slashed its forecast for the current quarter to $340 million, down from $447 million. Robinhood shares were already 70% below its July IPO price. That's the Bloomberg Business Flash. Tom, Francine.
Laura Wright, thank you very much indeed. Okay, let's get into the key market drivers with our markets editor, Christine Aquino, and Janet Murray, heads of market analysis at Brewin Dolphin. Christine, let's start with you. Are earnings coming to the rescue for these markets?
Absolutely, Tom. We definitely saw Apple's good earnings buoying the sentiment in Asia after a really battering week. And it's definitely doing a lot for some of those very exposed stocks to the Apple supply chain. Of course, we're talking about some of these Asian chip makers and technology-related stocks, definitely shoring up the sentiment there. But I think the nuance that we have to look at when it comes to taking into account Apple earnings is that Apple is a very different beast from the brunt or the part of the tech sector that has really borne the brunt of the sell-off, right? We're talking about some of these very frothy, profitless tech names. We're not talking about big tech. We're not talking about Apple, which is still very much rolling in cash. And so I think this is really important to take into account before we declare the all clear in terms of the equity sell-off this week. I think it's very important to make that delineation because it could give us clues as to whether we could see another bout of risk aversion in the weeks ahead.
Yeah, you're so right, Christine. Let's just not call it over yet. But Janet, given what we've heard from Apple, were we actually too pessimistic about the supply chain crunch? And are we going to see that with other semiconductors and tech stocks going forward?
Hi, good morning, Francine. Thanks for having me. I think Apple is doing very well in terms of managing its supply chain, but not for every company out there, right? Tesla is delaying its new model launches because of supply chain issues, and that's why the stock prices are penalized because they don't have a physical pipeline of new models this year. So it's really quite different across different companies. But we do expect that supply chain problems will gradually alleviate. I think if you hear what the chip makers company executives are saying, they do see eventually the situation will get better. and companies will be ramping up their inventories and production. So we do see the situation getting better, but probably not until the second half of this year.
Janet, there's always been that argument that you're going to see some strength in Europe because of that value and that cyclical tilt, particularly in an environment of higher rates, and now money markets pricing in what, possibly 5 rate hikes in 2022. We've seen that outperformance just in the last 3 days of European equities versus the US. Do you expect that to continue?
Yeah, I think in the near term, European equities probably have more legs than the US market. Primarily because I think in the near term, we all know that the growth areas of the market are being hammered because of higher rate expectation. And that expectation is less pronounced in the euro area. And also we feel that the recovery will be more notable this year for Europe versus the US because we think that the services sector in Europe still have a lot of room to improve, given that the economy have yet to really fully reopen for tourism. I think that will be quite supportive. And also, I think the economic easing from China usually it tends to benefit the euro area first. So we do think that in the near term, Europe, of course, because of the value and more cyclical tilt, it should outperform the US in the near term.
Janet, when you look at some of the things that we've been talking about, which is the flattening yield curve and everything to do with treasuries, I mean, is the dollar really the one thing that we need to watch out for because it will reprice every asset class?
Yeah, I think the dollar probably still has room to extend this rally, given that there is so much interest rate differential between the US versus the rest of the world. And we do think that the dollar should extend its rally for a little bit. And it is important. I think it does suggest to us that the emerging market may continue to struggle a little bit more. The tightening monetary policy backdrop in the US is already unsupportive. And we have Russia, the geopolitics tension there, which is not helpful for the Russian ruble and also the Russian assets, which drag down the overall EM ex-Asia performance, generally speaking. And so the stronger US dollar is just going to be further unhelpful for the whole emerging market.
Okay, so further upside for the greenback. Janet Moore, we'll get more calls from Janet Moore from Brewin Dolphin after the break. Bloomberg's Christina Kino, as ever, thank you for breaking down the key themes that we are watching in these markets. Coming up as Apple's sales climb 11% to a record $124 billion in their latest quarter. Have they conquered the supply chain? That story is next. This is Bloomberg.
Do you think that electric vehicles could reach 10% of the American market by the end of this year?
That's difficult to say, like you said, because it'll be both, not only demand, based on the demand we are seeing for our vehicles, and the rest of the industry is seeing. It feels like the demand is certainly there. But the question will be how quickly can we, all of us, execute to build capacity to meet that demand. And that's what we are very busy doing. Within the next 24 months, we expect to get to about 600,000 battery electric units globally. And that's before our bigger investments that we're making in Kentucky and Tennessee, both for batteries as well as assembly, come online, because they don't come online until about 2025.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Happy Friday. Welcome back to the Open. We are 13 minutes into your European trading day. Let's look at what's happening across the benchmark. You're seeing losses of close to 0.5%. It's heavier over in Germany, and the DAX is down 0.9%. France is being held up to some extent by what's happening with LVMH. We'll get into that shortly. The CAC count is down just 0.2%. We have 4 sectors in the green, led by retail, up 1.4%. But apart from those 4 sectors, every other sector is in the red, led by technology, down more than 1.2%. The yields are ticking up on the 10-year, up 3 basis points in today's session at 183, and the 2-year remains above 1.2. Let's check in on some of the individual movers. Wow, look at Signify Go. This is the light maker. So that company obviously updating with its earnings. Their comparable sales beat. They came in the fourth quarter up at 4.5%, well above the estimates. Revenue also a beat as well, even as they warn that the supply chain constraints and raw material costs, elevated raw material costs will continue. You can see investors rewarding that, up at 12%. LVMH is the big one, really, after Apple. Gains of more than 3%. Record sales. China is back. The US is back in terms of demand for luxury. Japan was a bit of a weak spot, but overall, this was a smashing set of numbers from LVMH. And Givaudan, we're going to be speaking to the CEO in the next 15 minutes or so, currently down 4.4%. Again, input costs a challenge for that company, which makes perfumes and flavorings for food. Okay, let's switch focus then from those particular corporates to the question of Apple. The world's most valuable company beat sales estimates, marking a victory against a supply chain crunch fueled by both the pandemic and chip shortages. Joining us to discuss is Bloomberg Quick Takes Alex Webb, who's all across this story for us. Also Bloomberg Business Week columnist on technology. Alex, how did Apple, is it just their sheer size and scale? Is it their imprint, their footprint in China? How do they navigate these supply chain constraints so successfully?
I mean, they have a really smooth supply chain machine. It's the machine actually that Tim Cook built. It's quite interesting looking at the numbers. They didn't do as brilliantly on the iPad as they did in the iPhone, and they said that actually they took some components that had initially been planned for the iPad and directed them towards the iPhone, which offsets some of those problems. They also are pretty good at managing expectations, and they had suggested that it was not going to be a brilliant quarter or as brilliant as had been expected because of the supply chain problems. That meant there was maybe a slightly lower bar to hit, and they hit it, with plenty of room to spare.
But it's a reminder they have that agility, and you point at the case of the iPad, moving those components. They do have that ability to react quickly. And it's always been a head scratcher to me that a company like Apple with a balance sheet this strong is dragged down more broadly by the market sentiment, the worry about higher yields, the worry about technology. Surely Apple needs to be carved out as a separate basket when it comes to how we look at technology.
Well, the thing is, these technology stocks are valued on growth. And so if there is any wobble to growth, we saw this with Microsoft, that Microsoft suggested that, Microsoft didn't have as good a quarter as had been expected with Azure, its cloud business. It was punished for that. Then on the call, they said growth would actually be perhaps better than expected in the upcoming quarter, and the stock popped as a consequence. Despite the strength of the balance sheet, Apple's valued at $2.6 trillion at the moment. It's got net cash of about $60 billion. It generates cash of about $90 billion. If you were to spend all that money on buybacks, you're looking at maybe 2% market cap that the contribution would be equivalent to. So, the strong balance sheet is one thing. It isn't, when you come to the valuation, necessarily as important as it might have been a year ago.
Okay, Alex Webb of Bloomberg Business Week and Quick Take, thank you for breaking down those Apple results and the way that they have adjusted to these supply chain constraints. Janet Mew, I'm pleased to say, head of market analysis at Brewin Dolphin, is still with us. Janet, what do you do with technology at this point? Do you like big cap tech? Do you buy?
I think right now valuations of a number of these mega caps, big caps have adjusted, so definitely looking more attractive than a month ago, for example. I think we focus on the quality aspects. I think markets are currently very worried about the macro uncertainty, about interest rate hikes, about potential economic slowdown, etc. So I think investors will be more and more drilling down into the micro of all these companies. So they will reward companies who can defend the margin, who navigate the supply chain, like Apple, performance aftermarket yesterday, and penalize those that don't. So I think we'll be focusing more on the fundamentals, and we think that it is actually a buying opportunity for companies that display these good qualities.
Okay, interesting. You also like consumer staples, Janet. Just unpack the rationale for that.
Yes, we think that staples, the valuations are relatively cheap, and also they're quite defensive in their nature. And we also think that if we believe that inflation is going to be higher, linger on a little bit higher, but not shockingly higher, I think staples should actually do well in that environment, because these companies actually possess some degree of ability to raise prices and to defend their margin. But that's on the base case of slightly higher inflation, but not shocking. And we also think that generally these are still unlocked, and we think that it is a good thing to add to for portfolios in terms of market uncertainty.
Okay, we've seen commodities at record highs. The energy sector has certainly outperformed. Is there further upside in energy stocks?
I think in the near term there could be. I mean, oil prices approaching $90 per barrel, and many commentators are saying that it would probably reach $100 in the near term. So wouldn't rule out any further upsides, but given that the rally has been so strong already, it is perhaps a trade, and I don't know when it is going to end, but we do think that for us, we are long-term investors, and we really focus on companies that would do well on a secular basis, and we think that some of these companies, they may be scrutinized by investors in terms of their plans on the transition to green energy, net zero carbon emission, etc. So we still have a preference over companies that would be delivering better returns in the very long term. And we do feel that right now the energy rally, it is perhaps more of a trade than a long-term investment.
Okay. Maybe overdone on energy. You like consumer staples, and maybe an opportunity in mega cap tech. Janet Murray, head of market analysis at Brewin Dolphin. Thank you. Have a great weekend. We appreciate your insights. Coming up, can't find your favorite products in stores or online. Top CEOs tell us the supply crunch and high inflation will be with us for some time yet. That is next. This is Bloomberg.
early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
There are multiple supply chain challenges. Who knew that global logistics was this fragile?
We have to be careful because we all live in a very, very chaotic world, and uncertainty is the rule of the day.
Supply chains around the world are very constrained. The uncertainties are going to be here for, I foresee it, into 2023.
We have seen shipping and container shipping prices increase by a factor of 3.
We'll see price hikes from businesses to consumers.
And so it's inevitable that some of that will have to be priced through towards the end markets.
The labor market says it's very tight. So it appears that the economy has less capacity than we thought. And so that's why we're in a situation where inflation, has not faded away quickly.
It's coming throughout the business, it's coming in supplies, it's coming in wage inflation, etc. So of course, the key here is to maintain a pricing power and to be able to share that pain with customers.
That will always be part of the discussion from now on.
Okay, inflation is a part of the discussion, of course. That was some of the views that we've been having and hearing from across Bloomberg TV. It was interesting. We had Paul Donovan from UBS speaking to myself and Francine a week or so ago saying, look, it's not about supply chains, it's all about demand. But Fran, you're on the ground in Rome, so I want to get your gauge on the cost of espresso. No one is better placed to talk about coffee and price hikes when it comes to that important question of caffeination than you. Just how costly are they, Fran?
Yeah, I've gone to every single coffee shop in Rome just for research. So thank you so much. The LACWA index will be out very soon, but this is a serious concern. So you talk about inflation. Of course, a lot of, around the world, everyone's being hit by it. In Rome, there's a lot of talk about the fact that an espresso that used to be €1.10, €1.20 has now gone up to €1.50. And again, this goes back to the cost of living, to the fact that the next prime minister, if Mario Draghi becomes president, will have a tough job in trying to keep everything under control, and inflation is something that you hear about, of course, talking in the cafes around Rome. I want to show you the papers very quickly. Tom, some of them are quite funny. There's a half-naked Mr. Salvini in a nightclub. Of course, this is because he's one of the kingmakers. We still don't have a president. Voting continues. This one's also quite fun. It's Mario Draghi with a voodoo doll trying to get rid of some of the people that could take his place as president. And then I have to say some of the other papers, more mainstream, La Repubblica, La Stampa, just a little bit more sober, but this is front page news just because we're on day 5. There's another vote. We could even get 2 votes today, but we still don't have a candidate that seems to have consensus from most of the parties.
Wait, Fran, the shirtless Salvini, was that a mock-up or was that actually him in a nightclub? Salvini, the shirtless.
I think it was actually him, and this goes back to an old scandal when he made the government fall last time in the discotheque called Il Papete.
Love it, Francine. Thank you. We'll have more from Francine on the ground in Rome. Stay with us. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. Here are your top stories. Rate hike bets, Ripple, Treasuries resume their declines. Apple surges in after-hours trading as it blows through estimates, and supply chain concerns posting record sales. Plus, LVMH posts record annual sales, as well as customers snap up couture and cognac, cementing the group's rebound from the pandemic. Francine Lacqua is on the ground for us in Rome. I'll check in on your markets for you now, 30 minutes into the session. 2 key factors that investors are weighing up then, of course, the continued readjustment to that more hawkish Fed, with money markets pricing in almost 5 hikes for 2022. But the earnings as well. That picture's starting to brighten on the back of what we've seen from the likes of Apple and LVMH. Certainly the question around supply chains and the way that Apple has nimbly been able to navigate those. The beneficiaries, of course, for the broader tech sector. We'll see how that plays out. Currently, the European benchmark is down 0.7%. It's turned a sharper leg lower. Again, it seems like there is a question mark over what is happening in terms of just how aggressive the Fed will be in the flattening of the yield curve. We'll get onto the yields shortly. The DAX is down more than 1.3%. The geopolitics as well, never far away with Russia and Ukraine. We heard from the Lavrov, the foreign minister there of Russia, saying that they will defend their interests. The CAC 40 is down by 0.6%. Here in the UK, lower by 0.6 as well. Oil is higher, up above $90 a barrel the last time I checked. So the question around inflation front and centre for policymakers around the world. In Rome, where Francine is, but also in the White House as well. In terms of your sectors, it's retail that's outperforming. Just 3 sectors in the green this Friday, up 1%, more than 1%. Basic resources getting 0.4. Part of that is oil, of course, as well. At the bottom, you've got technology down by 1.7%. Not much relief then from the earnings that we're seeing in Apple. Let's not forget that this month you are looking at around $7 trillion of market cap that's been wiped off these markets as we adjust to a more hawkish Fed. Let's switch focus to the question of earnings, and then one particular company that is really well placed to talk about input costs and supply chains. Givaudan says it will pass on higher raw material costs to its customers after inflation weighed on earnings. The company, one of the world's biggest makers of scents and flavors, reported full-year EBITDA just below 1.5 billion Swiss francs. The consensus estimate was slightly above that figure. Givaudan says it was able to maintain its operations through the COVID-induced supply chain crunch, but can it keep that momentum going? To help us answer that is Givaudan's CEO, Gilles Andrier, who joins us now. Gilles, thank you. Good morning. What was the key takeaway for you from these results as you weigh up the implications, the impacts of these 12,000 different ingredients that you have to buy on a regular basis and the supply chain constraints? What for you stood out from the results and how it positions the company going forward this year?
Well, the whole pandemic obviously started for everyone, for us included, in March 2020, and from there on, it's been a supply chain that has been complicated, complex all over the world, to operate not only our plants, but also to source raw materials, the 12,000 you're talking about. And though that has been, I would say, seamless for our clients, so we've been able to navigate those turbulent times. We delivered a 7% growth in 2021 on the back of a 4% growth on 2020. So we reckon that we've been quite resilient in this environment. Going forward, as we see inflation impacting all categories around the world, that is true also for the raw materials that we buy. So we foresee a 9% increase of raw materials that over a period of 18 months we'll be able to compensate with a price increase. It's not the first time we are going through such a cycle. After the economic crisis in 2011, we also had a surge of raw materials that we were able to compensate, as well as in 18. So we are confident basically for 2020.
Gilles.
Yeah.
Gilles, good morning from Rome. I hadn't traveled for quite some time. I went through the airport. It's empty. Here, no tourists in Rome. You make a lot of perfumes that, of course, sell at duty-free in a lot of airports. When are you expecting travel to significantly pick up again?
Well, that's been obviously, the whole duty-free, which in 2019 represents roughly 20 to 30% of prestige fragrances being sold in the world. So obviously with the airports being closed in 2020, we saw the fine fragrance business going down quite significantly. But I think that basically to everybody's surprise, to our own surprise, what has happened is that despite the fact that people have not gone back traveling in 2021, we've seen our fine fragrance business rebounding extremely strongly at 22% growth. And essentially that has been explained by the fact that the e-commerce has been so much accelerated by our clients all around the world in 20 and 2021 that it somehow compensated for the losses in duty-free stores. And, with the rebound, I would say consumers being more confident and going for beauty products also explains, this rebound, which I think has essentially surprised everybody.
Gilles, we're talking about input costs. Gas is obviously an important factor for you, for the company, when it comes to the input costs side of the equation. Do you see these elevated gas prices that we're seeing in Europe being sustained over the long term? Are you looking at it 12 months, 1 year, 2 years? How are you and the team planning for that?
So it's not so much gas is part of it that obviously impacts the energy cost that we use in our plants. But I would say the main driver for some of the ingredients which are chemically produced is the oil price, which has gone up. But this is not just one driver. There are many drivers because we actually use and buy 70% of what we buy are natural products. And all of those natural products are also going up like gas and oil. So this is really across the board.
How much more are you expecting, though, energy prices and gas prices to go up, Gilles? And can you have a natural, do you hedge against that?
No, we don't hedge against that. I can't give you a figure, but essentially, as I said, this is only one driver, which is not the only driver, and it's actually not the main driver of raw materials costs. They have many other factors, which are again just fueled by the demand. The demand has surged quite strongly in our industry for consumer staples, for perfumes, so that has put a lot of pressure on many naturals, and therefore, translating that into a price increase. So the energy cost is really not the main driver.
Okay, so part of the mitigation is to pass these costs on. How long do you think you'll be able to sustain that increase in prices as consumers start to feel the pinch, as they also face their own cost of living problems? Are you worried about the consumer? Are you worried about the health of household balance sheets? How long can you sustain these price increases?
So what we plan is to let's say compensate for this increase over an 18-month period, so to recover in absolute terms, the price increase. Our clients are increasing their prices because not only to compensate our prices, but we are only a very, very, very tiny part of the product cost of our clients. Only 0.5 to 3%. So this is really a minimal cost in the whole formulation of our clients. And yes, for sure that's going to put some pressure on the volume growth because consumers might not be willing to pay higher prices. So we'll have to go through this. But again, this has been the case in 2018 and 2011, where we have successfully gone through those two periods.
Okay, Gilles André, CEO of Givaudan, thank you. We do appreciate your time this Friday morning. The stock, by the way, Givaudan, over the last 12 months, up about 4%. Today, down around 5%. The CEO giving us an update on the supply chain inflationary challenges for that business as they look ahead. Fran.
Yeah, so coming up, we cover the 5th day of voting for a new Italian president. A lot of think tanks are saying, look, it really shows some of the dysfunction in some of the electoral system. Coming up next, we'll look at how the country's economy can recover from the pandemic. We also look at and deep dive into the infrastructure program. We'll talk energy, we'll talk EU funds, and whether Mario Draghi can really become the president of the Republic. That's coming up shortly, live from Rome. This is Bloomberg.
Did Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
City. In London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
story. How are you thinking about those dynamics?
Welcome back to the Open. We are 42 minutes into the European trading day. Losses of 0.8% across the benchmark. The futures stateside when it comes to the S&P E-minis, just holding on to gains of 0.1%, but pairing some of the earlier upside that you saw for those futures. Across the sectors, 3 that remain in the green, including retail, basic resource, consumer products, everything else in the red. Your US 10-year is currently at 182, yields up by 2 basis points, and the dollar is strengthening, up 0.2%, on track for gains of about 1.5% for the greenback this week. Francine in Rome with a guest as she continues to navigate the presidential election in Italy. Francine.
Yeah, we've gone through the paper review. Some of them are actually really fun today. And we are in the 5th day of voting for a new president. Now, the Prime Minister, Mario Draghi, of course, is still seen as a favorite, but it's unclear whether he'll get it. So you speak to some people and they say, look, with every day that passes, he has more of a chance of becoming president because actually it's very difficult to find consensus. Others saying with every day that passes, his chances diminish. Now, he still has not got backing of enough lawmakers to make it through. After the politics settles down, though, how is Italy's economy shaping up? Well, joining us now to discuss all of this, to discuss the EU's COVID recovery fund, and of course whether that could be a lifeline for Italian infrastructure. And for the latest on the vote for a new president is the chair of ANCE, Giovanni Angelica Donate. So, Angelica, as always, thank you so much for joining us. It's great because you focus, of course, on infrastructure. You focus, of course, on a lot of cement companies, which was one of the main beneficiaries and recipients for the EU recovery fund. Do you worry about the next prime minister if Mario Draghi is president and what that means to access to these funds?
Well, what we're actually mostly worried about is what will happen in the interim if he leaves and a new president must be chosen, a new prime minister, sorry, whether it's through a general election or whether it's another interim prime minister until the next election in 2023. 2022 is a crucial year. It's the year that all the big tenders for infrastructure projects within the recovery fund need to be put out so that we can complete them in time. And as you know, during a general election, everything grinds to a halt until the new prime minister is in place. So there's a lot of fear around the fact that things could stop in the interim whilst we figure out what's going to happen.
So I have to say, we've been on the ground for 4 days trying to explain the system to an American and largely Anglo-Saxon audience. I mean, they think the Italian political system sometimes is crazy. So we could see a president or not, but what do you need from the next prime minister? Do you need Mario Draghi as prime minister?
We need clarity and certainty. The business community is very clear in saying that Mario Draghi is our best option. We've seen how well he's worked so far, how well he's managed the very complex issues around getting the recovery fund monies to Italy and also planning to spend them, which is the hard part, and spending them well. So from a business standpoint, yes, he is very much needed, also because we don't know who the next prime minister could be. It's not clear whether it be another technical figure, whether it be a political figure, and as we said, whether we'd go to a general election now, which would be very, very dangerous.
So how many tender offers are you planning to participate in, and how much of a concern are these rising energy prices? I mean, if you make cement, you need this energy, so what should be the Italian energetic policy?
Well, it's not just energy, it's everything. We've seen a drastic rise in all raw materials, not just in construction, but across other sectors as well, since November 2020. The energy crisis is extremely scary. Energy prices had spiked already before this current Russia and Ukraine situation, but now it's getting even worse. The energy bill for families, for businesses has gone up 3- or 4-fold, and you know, that on top of steel price increases and wood increases and PVC increases, everything's gone up, and obviously you know, you can't make ends meet in that way.
So, but for you, I mean, as a construction company, are you able to pass on those increases in costs to your clients, or at some point is it going to be much more difficult, so you yourself have to take a hit?
So that's part of the ongoing discussion here in Italy about how the government needs to take care of the situation for public sector companies, because obviously our client is the government, and so they've already put in place some measures for the first semester of 2021, and now what the business community is asking for is some structural measures to deal with price increases, because they're here to stay for the time being.
How long do you think they're here to stay for? I mean, is it supply shocks or is it something a lot more structural?
I think it's demand and supply driven, and I mean, from what I've seen, from what I've read, it's not going to go away anytime this year at least. So 2022 is a very important year, as I mentioned, and you know, things need to be done to make sure that companies can tender for these big infrastructure projects and tender in a way that they can actually build them, because there's no point tendering and allocating a bid if then the company's not able to build it.
But do you see demand actually for infrastructure projects? So I guess the worst case scenario would be, you know, interest rates going up because of inflation, but a company such as yourselves also just you know, having to push down prices to actually get contracts.
Well, we can't. How can you push down prices when costs are going up? Yeah. So what might also happen is a lot of these big tenders might just go deserted, because nobody in their right mind would risk their entire business on one project. I mean, we want to work for our country. We want to build good infrastructure, but we also need to pay our salaries, our staff salaries, our own electricity bills as well. So,
and these are infrastructure projects actually that that Italy probably should have done in the last decades that still haven't come at the forefront. So, do you feel like in the next 2-3 years, if the next president or the next prime minister don't get on with it, Italy will be set back by 10 years?
Well, it's a mix, actually, because the first projects that were put into the recovery fund buckets were the ones that already existed because it was faster to get these into the ground. And now they're also working on new projects, especially centered around green innovation, which, might have never been thought up if we didn't have these funds. But as I said, we have a very, very, very tight time frame to deploy these funds. And, it's now or never. And if we don't meet our targets, then we will have lost the biggest opportunity the country's had in recent memory.
Angelica, thanks so much for joining us. That was the chair of ANCE Giovanni and Donati Immobiliare Group, Chief Executive Angelica Donati. Now we'll have plenty more, of course, from Rome throughout the day. We look at the voting. We find out whether there's only one vote today or two. Coming up, also, we look at LVMH posting record sales as consumers snap up luxury goods. We'll discuss cognac, haute couture, and the outlook for the French economy. That's coming up shortly, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 51 minutes into the European trading day. You're seeing losses of 0.8% across the European benchmark futures stateside, holding on to gains of 0.2 for the S&P, 0.6 for the Nasdaq futures. A big corporate story for us. You've got Apple, but you also have the question of LVMH and the outperformance there in terms of sales. France's economy as well, front and center for us. That data point coming through, expanding more than anticipated at the end of 2021, overcoming supply shortages and COVID-related disruptions. GDP grew 0.7% in the fourth quarter. The better-than-expected growth gives President Emmanuel Macron a lift ahead of April's election. For more, we are joined by reporter in Paris, Caroline Cornin. Caroline, what drove the growth in GDP and how much of a boost is this for Macron?
You can see that the French GDP is quite resilient. In fact, it is the fastest recovery among the 4 biggest Eurozone economies. This plus 0.7% in the fourth quarter brings the number for the full year of 2021 to 7% growth in France. That's partly due to the fact that France is, of course, less reliant on the manufacturing sector compared to Germany. The manufacturing sector in France is less than 10% of GDP compared to nearly 20% in Germany. So, of course, 3 months before the presidential elections, that gives Emmanuel Macron a ace up his sleeves, especially after the good numbers we also had on the job seekers front. You can see on this graphic, the number of job seekers in France has actually fallen to the lowest level in almost a decade.
So, Caroline, LVMH also beating estimates in the fourth quarter. What are people buying? Haute couture because they're fed up of lockdowns, or are they buying Christian Dior, or actually are they buying the cognac?
They're actually buying a bit of both, but the fashion and leather goods unit, which is LVMH's biggest division, is driving the strong performance of the luxury group. Organic sales in these divisions up 42% compared to pre-pandemic 2019 levels. This, of course, includes brands like Louis Vuitton, but also Christian Dior, Fendi, Celine, or Marc Jacobs. Of course, people have been spending their lockdowns savings into luxury fashion and goods, but also drinking more recently a bit more champagne or Veuve Clicquot, Dom Perignon, as they start socializing again, going out and dining. That's, of course, also pushing this wines and spirits division for LVMH. In fact, if you look at the performance of LVMH shares over the past year, LVMH has grown so much that it's become the biggest member in the CAC 40 index, but also in terms of market value, the biggest company in Europe. And this is also true for the performance of all the luxury stocks like Hermès or Richemont, the owner of Cartier. They all have grown about 40% bigger than what they were before the pandemic.
Okay, Caroline Conard in Paris on LVMH and those record sales, and of course that beat in terms of the French GDP number as well. Let's get it back out to, well, we're still with Francine on the ground in Rome. Francine, of course, I can't talk about luxury without talking about the China component, and certainly when I was there, moved back in August, there were lines of people outside these luxury houses just trying to stock up. They can't leave China, so they're spending their money on those luxury goods. What is the atmosphere like on the ground in Rome compared to London?
Well, you don't have any tourists actually here. There are fewer tourists in Rome, I think, there are in London, and so there, you know, all the designer shops about 10 minutes from here, and they're all empty for the moment. And when you speak to fashion executives, they've really had to rethink, Tom, where they open a lot of the stores, focusing much more on domestic demand. So as you say, the British, you know, employee, like the British people buying a lot of luxury goods in Britain, the Romans doing the same in Rome. And so that changes, of course, some of the shops at the airports and how they think of that going forward. And then the other component when it comes to luxury is, of course, the exchange rate. So if you have a stronger dollar going forward, you could maybe shift some of that demand if travel picks up.
I now have flashbacks to Salvini shirtless again. I can't get this out of my head. That front page you showed me, I'm thinking maybe he should pay a visit to some of these retailers and stock up on some new shirts.
You're welcome. Yeah, I mean, certainly he's doing wonders for the discotheque business. He's always kind of seen, you know, either shirtless, partying in some places, but this is how he operates. He has a very active Instagram account. He, you know, regularly posts pictures of him eating pizza with his girlfriend, and he's trying to, you know, be like the person next door who will save you from some of the big globalization going forward. He could well win the next election, depending on when that is.
So one to watch still. Francine Lacroix on the ground for us in Rome. More with Francine just in the next few minutes. Stay with us. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Eric Schatzker. Join me for my front row conversation with famed investor and GMO co-founder Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period for 20 years, which I think is ending. We're going to live in a world of bottlenecks and shortages and price spikes, and we have to get used to it and learn to manage our way around it.
Catch the full front row interview with Jeremy Grantham this weekend on Bloomberg Television.
An iPhone has never been more popular. During the December quarter, we set an all-time revenue record for iPhone, thanks to the strength of our incredible iPhone 13 lineup.
Here we are, 6 quarters of growth in the United States, this kind of growth over the fourth quarter that we haven't seen since the 1980s. This really does point to the fact that the business sector is starting to get more back to normal, and that's what we want to see.
If you look at the fourth quarter results, we had a very solid profit, better than what people thought we were going to have. It was sort of in between the Delta surge and the Omicron surge, at least for us. We've seen a lot of bookings canceled for January and February, but March bookings look good. We're predicting that we'll be profitable in March.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance early edition. I'm Francine Lacqua here in Rome, and here's what's coming up on today's program. Rate hike bets ripple while treasuries resume their declines. Apple surges in after-hours trading as it blows through estimates and supply chain concerns, posting record sales. And we look at luxury. LVMH posts record annual sales as customers snap up couture and cognac, cementing the group's rebound from the pandemic. So we have a lot going on today. Let's get straight to the markets. To our markets expert, our editor, Christina Kino. Christine, I know there's a repricing, certainly on how many hikes we'll get from the Fed, how many hikes we'll get from the Bank of England, and that's moving at the fixed income space.
Absolutely, Francine. We're definitely still seeing an extension of those bond yields, particularly in the Treasury sector, seeing those gains in yields across the curve, about 2 to 3 basis points across the curve at the moment. And of course, we're also seeing a similar move in the dollar because we're seeing that relationship really between Treasury yields and the dollar reestablishing itself. At the start of the week, the dollar was all about risk aversion, but now as we're ending the week, it's going to be all about that rate differential story. The dollar, of course, extending its gains, but stopping just short of that 16-month high that we saw in November.
Yeah, and we're just getting also some GDP figures, Christine, out of Germany, that economy contracting 0.7% in the fourth quarter. Christine, overall, is dollar and dollar dynamics probably the most interesting bid in assets right now?
I would say it is definitely one of the most interesting bits, Francine, because of course it has repercussions for assets across the board, particularly that emerging market complex. I mean, you know, we're seeing emerging markets definitely feeling the brunt of the sell-off in markets this week as risk aversion takes hold everywhere with that Fed hawkish surprise. And really the story is going to be, will those emerging market currencies be able to overcome the dollar strength that is about to descend upon us? And especially because we've seen emerging markets also seeing similar struggles as the Fed. You know, central banks there have really tried to get ahead of the curve in terms of inflation with massive rate hikes last year. Now the Fed is about to embark on the same tightening cycle, and the question really is, will they be able to maintain that strength, or will the dollar really just sweep across everything and push everything lower, especially if we see that renewed strength on the back of Fed tightening?
Yeah, and I wonder whether, Christine, a lot of the repricing is also because day in, day out, we talked about supply chain concerns. Day in, day out, we heard about some of the chips not being available, even from Apple, that probably overpays or pays more than other competitors for some of these components. Now, with the fact that actually we don't have the supply chain constraint, will it reprice? I mean, could it reprice earnings, for example, or some of the equity stocks?
Well, Francine, I think is definitely one to watch. So certainly the question of higher costs, whether it's resulting from the supply chain issues, as you alluded to, or other things. You know, I mean, we're seeing similarly LVMH, for instance, reporting higher costs as well in their results, but then they're able to overcome that by really exercising this tremendous pricing power that they have over the markets at the moment. But really, you know, whether it's even if the supply chain issue is easing somewhat, as we gleaned from Apple's results, there are still issues related to overall costs that could be a big factor for margins. So that's going to be one to watch for sure when we see more earnings from different companies coming through.
Wonderful. Thank you so much. Our markets editor there, Christina Kino, looking at some of the big market moves. Now let's get more on Apple. The world's most valuable company reported earnings after the bell, and Apple's strong results really defied fears of a supply chain disruption. Let's get straight to Laura Wright in London, who has all of the details. So Laura, this is encouraging news. So maybe some of the fears were overblown.
That's exactly right, Francine. The fears were overblown. And on the earnings call, the CEO, Tim Cook, he was reticent to change Apple's supply chain because it has allowed them to be so resilient. We can see in pre-market trading that Apple is surging. This record for the fiscal first quarter, EPS smashed $2.10 a share, surpassing a $1.90 that the analysts had predicted. Gross margins were at a 10-year high, which shows the pricing power that Apple has had in the market. Phenomenal growth from Macs, phenomenal growth from services. We know that Apple is pivoting toward a more services-based ecosystem. Hybrid working seems here to stay. Interestingly, disappointing sales for the iPad, although on the earnings call, we learned that iPhones had been prioritized compared to those tablets. The regional breakdown, China was the outperformer, 21% revenue growth year over year. Japan, a notable laggard, double-digit negative territory, suggesting that particular market is saturated. The largest, the United States, was stable, along with the European Union. So what do the analysts think? I was talking to one in the early hours of this morning from Evercore ISI, and he told me, looking ahead, the March quarter is a potential headwind. It's seen as being pivotal. That said, a multitude of new products are coming out. The iPhone 14, Francine, I'm still using the 8, and also the metaverse. Apple is going to enter the metaverse with virtual reality.
The 8. Laura, you at least have to get onto the 10 or the 12 because it has a beautiful portrait mode where you can get pictures. That is your assignment for the weekend. Our Laura Wright going through some of the wonderful things that we've heard from Apple. Of course, still concerns about some of the shipping and delivery. Coming up, we cover the 5th day of voting for a new Italian president. We still don't have a consensus candidate. We look at how the country's economy can recover from the pandemic. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in Rome. So let's get straight to the Bloomberg. First word news, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Let's start here in the UK. A report into alleged rule-breaking parties in Downing Street could be stripped of key details following a request by London's Metropolitan Police. Civil servant Sue Gray was commissioned by Prime Minister Boris Johnson to look at allegations that lockdown rules were broken repeatedly by his office. Gray's findings were originally expected to be published this week. Now, President Joe Biden has spoken with Ukrainian President Volodymyr Zelensky over growing tensions with Russia. Following the call, Zelensky tweeted that the conversation covered diplomatic efforts to de-escalate the situation and potential financial support. Biden is planning to raise the issue with German Chancellor Olaf Scholz when he visits Washington next month. Pfizer has got the nod from the EU drug regulator for its COVID-19 pill. Paxlovid is the first oral treatment for the virus recommended in the bloc, with trials showing it can reduce hospitalizations and deaths among high-risk patients by nearly 90%. Pfizer says research shows the drug is effective against the Omicron variant. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Italy entering day 5 of voting for a new president. The Prime Minister, Mario Draghi, still seen as a potential favorite, but after 4 rounds of voting, he still hasn't got the backing of lawmakers. So let's get the very latest to discuss this. Then we'll also talk about supply chains, inflation, and the Fed. We're joined by Brunello Rosa, Chief Executive and Head of Research at Rosa and Rubini. So, Brunello, as always, thank you so much for joining us. I mean, there are a number of ways this could go. Either we have an unknown president of the Republic that is actually quite, stately. Usually it's someone that's a little bit older, cross-party, without a real agenda. Or Mario Draghi still becomes president of the Republic. Are his chances increasing or decreasing with every day that goes on?
Increasing for the very simple reason that if parties don't find alternative solutions, then there's only one institutional, in inverted marks, solution available, and that's Draghi becoming president. There are others, of course, such as promoting the current president of the Senate, Elisabetta Casellati, to the highest job in Italy, but this is perceived by the left as a partisan choice by the center-right, so it's not going to get the backing of that part of parliament. No. So eventually, parties will have to agree on somebody. If nobody comes up, is Mario Draghi most likely.
So, Brunello, what's the best case scenario for the markets? I mean, does the market really care if Mario Draghi becomes president or prime minister as long as he stays in some kind of power in Italy?
The market is happy if Mario Draghi is in the picture. Best solution would be Mattarella for longer and Draghi and Palazzo Chigi for a little bit longer, but then you would have a problem in 2023. So to some extent, you solve the problem now, the president for the next 7 years, and then you find perhaps a caretaker or technocratic government for another year until the elections, and then after the elections a new political government emerges. As long as there's clarity after the election, the market will be relatively happy, I think.
Brunello, give me a sense of actually how Italy fits into this wider concern about access to the EU recovery funds, how it fits in with these higher energy prices and some of these supply chain constraints. Does Italy have to play a game of more friendliness to Russia because it's so dependent on it for trade?
Well, Italy doesn't have gas or oil resources to speak of, and therefore it relies on supplies from other countries. He has had his own bilateral relationships with Russia and China, but these have caused, of course, a bit of concern in Washington, and therefore effectively Italy has delegated all his relationship with these foreign countries, such as Russia and China, to the EU, and that's how it fits in the more general global supply chain issue, knowing that Italy, of course, also as a producers of cars, is being affected by these supply chains bottlenecks.
Bernardo, we've also had some, a repricing after a more hawkish Fed, and that's impacting a lot of assets. Will it impact what the European Central Bank can do, and what does that mean for an economy like Italy?
The ECB is on a different page compared to the Fed. The inflation rate in the US is 7%, in Europe is still 5%. In both cases, it's seen peaking short term, and therefore the ECB can afford to be slightly less hawkish than the Fed. Yet they said that PEP will be discontinued in March, and it was going to be replaced by a much smaller APP. The implications for the dollar, euro dollar, I think we're seeing that so far. The monetary policy differential is coming back in vogue. Higher inflation, higher rates clearly is not good either for bonds or equities at this stage.
Brunello, what's your prediction for the Italian presidential race? I can bet you actually an espresso or even a macchiato, no expenses spared, in front of, Caffè Grande Ostac in front of the Senate, if you get it right.
Okay, that's a good bet. I still think Draghi has the higher chances, but not over 50% at this stage. The point is all the others together don't reach 10% each. So eventually, Draghi is the one with the greatest chances at this stage, I think.
All right, wonderful. The espresso bet is on. Brunello Rosa there, Rosa and Rubini, Chief Executive Officer, CEO and Head of Research, joining us today. Now, coming up, we talk a lot more about some of the earnings season. Electrolux net sales beat estimates in the fourth quarter. We talked to the Chief Executive, Jonas Samuelsson. He's up next, and this is Bloomberg.
soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, let's look at earnings. And Electrolux reported net sales for the fourth quarter that beat the average analyst estimate. The Swedish domestic appliance maker says it expects demand this year to be above pre-pandemic levels. Now, we're joined now by the chief executive to discuss the results and the outlook for the year. The chief executive, Jonas Samuelsson, joins us. So, Mr. Samuelsson, thank you so much for making the time to speaking to us today. How do you see demand going? Will there be stronger demand from some of your products going forward, or do you see that waning off?
No, I think we will see continued fairly strong demand as people are continuing to invest in their homes, working more from home, and using their appliances more frequently. You know, that all points to continued solid demand going forward in most markets.
Are you expecting to gain in market share? So what regions do you think you can grow bigger, and how much of a difference does it make?
Yeah, we're in 2022, it's going to be our biggest launch year ever in terms of new products that we're introducing. So we expect to gain market share in the premium end of the range, both in North America and in Europe, and also in Asia Pacific. So very solid year ahead of us in terms of market share opportunity through innovation.
Mr. Samuelsson, I was asking you whether that would make a difference because some of your competitors are struggling to keep up with demand. I guess there are some components that are actually very difficult to find. Will you see the same concerns going forward?
Yes, I think we're obviously at the peak of the Omicron surge, and in a situation that was already quite constrained, both in terms of ocean logistics and electronic components. We're expecting that to continue at least into the second quarter. With quite high risk of disruption.
So do you see the situation improving at any point because of these supply chains, or will it be much more protracted than we think it will be right now?
Well, I think as the pandemic hopefully starts to wane into the second quarter, and some of these backlogs or interruptions get washed out, I think there's a good opportunity that we'll see sequential improvements. I think there, some areas like, semiconductors, there probably will be constraints also into the second half, but a lot of the other ones will gradually work themselves out, I think.
Yeah, so what are some of the other ones, actually, where we could see supply chain, hiccups? I don't know is it still electronic components, or is it something else?
Electronics is by far the most challenged, but throughout last year we saw certain plastic grades, certain steel grades, and other components, on and off being constrained because of disruptions really driven by the pandemic. And and hopefully there we will see a gradual improvement in the stability of supply as the pandemic wanes. But again, the part that seems to be a little bit more protracted is the electronics, semiconductors.
When will steel prices stabilize?
I think steel prices have started to stabilize at high levels right now. To be frank, I think those prices are above long-term equilibrium. As demand stabilizes, I think supply will come on stream, and hopefully there will be a downward trend in steel prices. Sometime in the not too distant future. Hard to call exactly when.
What happens to energy prices from now? I know we're expecting them to rise, certainly in Europe, for at least a couple of months. Do they stabilize after that, and can you hedge against them?
Well, I can't say that I'm an expert on energy prices, but certainly as we get into the warmer months, I assume that supply will be stronger and prices will come down as a consequence of that. Certainly for electricity, it's not a major component for us, so it's not something we track as closely as, for example, steel and plastics.
Mr. Samuelsson, what can you tell us about your share buyback program? How will that progress in the next couple of quarters?
Well, the board announced in the fall last year that they're intending to introduce an annual sort of recurring buyback program, something we haven't done for quite a number of years. But we expect to continue to buy back shares consistently over the coming several years. They announced the intention to buy back about 2.5 billion Swedish krona worth of share. It's an amount that's similar to the annual dividend. So, and that's a level that I think can be sustained for quite some time.
All right, so Mr. Samuelsson, thanks so much. Jonas Samuelsson there, the Chief Executive of Electrolux. Now, coming up, we'll have plenty more, of course, on some of these earnings. We also have more from the fifth day of voting for a new Italian president. We'll be speaking to the Minister for Ecological Transition, the Energy Minister, Roberto Cingolani. Stocks mixed. U.S. futures actually fluctuating a little bit. Again, investors trying to figure out what the message from the Fed this week means for their portfolios. We had strong earnings from Apple, but of course there's always these prospects of tightening policy in the U.S. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Rate hike bets ripple through the markets. Treasuries resume their declines. We'll have plenty more from Italy throughout the day. It's voting day 5, and we'll look at what that means for the future. And finally, Apple surges in after-hours trade. Those concerns about supply chains didn't really come to the forefront. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Let's get straight to the markets, and let's get straight to our editor, Christine Aquino. Christine, we look at the markets on the back of what the Fed did, and it does seem that markets are fluctuating a little bit. Yes, they know that the Fed was maybe a little bit more hawkish than they were expecting. In certain parts of the markets, that's being repriced, but otherwise they're also focusing on these strong Apple earnings.
Absolutely, Francine. And I think that really just speaks to how noisy this week was when it comes to several catalysts, because at the start of this week, we were, of course, very much focused on that sell-off in equity markets driven primarily by the tech sector. But then, of course, we shifted the catalyst over to the Fed and that hawkish surprise from Jay Powell and finishing the week on good Apple earnings. So there's a lot going on in markets at the moment. And so there are a lot of conflicting signals. Of course, the equity sector very much reacting a little bit to what we saw from Apple, less so in Europe, of course, because as we know, Europe is a value play. It's not a tech play. So we're seeing equity indexes in the region primarily down here. But yeah, I think overall, there is this battle a little bit between the good, rather good earnings from Apple and a number of other companies that we've seen this week, LVMH, of course, included in that, versus the future trajectory of what the Fed's going to do when it comes to policy.
All right, our markets editor there, Christina Aquino, with the very latest. Thank you so much for joining us. Now, it is day 5, Italy entering the 5th voting day for a new president. Lawmakers still have not managed to agree on a new president after a 4th round of voting, a sign that it will be harder than initially thought for Prime Minister Mario Draghi to get the job. We are delighted now to be joined by the Italian Minister for Ecological Transition. He's the Energy Minister, and he's Roberto Cingolani. Mr. Cingolani, thank you so much for joining us. We've been talking extensively, of course, about the price of energy. We've been talking extensively about the price of gas. Is the Italian government mulling a new intervention to try and appease some of the pressures, not only on families, but on businesses?
Yeah, so far we've invested about 10 billion in mitigating the impact of the gas prices on the energy bill of the families and, of course, the small medium enterprises. So we made a number of new laws over the last few trimesters. And of course, we're monitoring the projection of the market, because we feel that this gas crisis will be long lasting. So we will need structural measures in the future to mitigate the cost of energy.
So, Minister, give me a sense of how much more, Italy could actually afford to spend when it comes to, trying to appease some of the higher energy prices. Is there, can the budget afford this kind of support?
Well, so far we're trying to mitigate in real time the increase of pricing. But of course, as we see that the crisis is really complex and will be long lasting, I think we should do more. And I believe that at European level, we should discuss about common storage of gas, joint procurement, to mitigate the global cost of the gas. And of course, I think we need to reanalyze the way electricity pricing is made so far. I mean, I don't think electricity can be linked anymore to the cost of gas. It's a nonsense right now. Maybe in the past was useful to accelerate the renewable energies, but no longer now. And finally, we should take into account the geopolitical situation that is very, very complex at the moment. Don't forget that about 800 billion cubic meter of gas over the next decade will be forwarded towards the east of the planet because of decarbonization to phase out the coal, and this of course will make the situation even more complex for the gas.
Minister, at the same time, I mean, we're seeing the situation extremely complicated because of Ukraine and all the geopolitics. Italy is effectively one of the countries in Europe most reliant on Russian gas. So do you worry that extra sanctions on Russia means higher prices for Italy?
That's a very complex problem. Our energy mix is basically monochromatic. We have gas, 95% of which is imported, and then we have renewable energy. With such an energy mix and such an extent of import, we might be in danger in case of a global crisis of gas providers. So we are monitoring the geopolitical situation, but as you understand, this is something in progress so fast and minute by minute. It's difficult to say what happens tomorrow. So we're just monitoring, watching. We have some contingency plan, of course, but we hope it will not be necessary.
Yeah. Is Italy ready to reintroduce nuclear power?
Look, we have a law after 2 referendums that states that we cannot make new nuclear power installation. So that is out of the discussion. And honestly, as I'm a technical minister, I wouldn't support right now in 2022 the construction of new nuclear plant of 2nd and 3rd generation. On the other hand, I'm very interested, I'm sure in the future, this could be a viable solution. The development of 4th generation small modular reactors could be a solution. We need to invest a lot in research and development, and this has to be a world effort. It cannot be a single country effort. And I'm sure something good will come out of that.
But so should gas and nuclear actually be part of the EU taxonomy plan, and is Italy ready to fight Germany on this?
Look, the taxonomy, we have to understand there are 27 countries with completely different energy mix. So the taxonomy must be inclusive. There cannot be a single solution valid for the entire European landscape. So there are a dozen of countries having nuclear power, others having massive use of coal, and others like Italy having renewable and gas. So of course, the taxonomy has to be rather flexible and inclusive. In that, I think it's a reasonable document. And don't forget, this is a financial delegated act, so it gives an idea of where we should invest. We should not say to a country, you cannot do this or you cannot do this. So it's reasonable. For the time being, it's a good document.
Minister, give me a sense of how much the increase in energy prices will impact GDP. How much are you expecting GDP to be affected by this?
I mean, of course, we hope this will not grow steadily as it was so far. The impact can be really bad. You know, we expect something like 30 billion increase in the energy cost for the country in 1 year. So this is actually a big number, and we are actually accelerating with our economy. So we are very happy with this. But of course, the cost of energy is going to impact, is going to be counteracting. I'm not able to make a forecast right now, and we hope it will not be that bad.
Minister, finally, I mean, the impossible question, when do you think we'll have a president by? We're here covering the elections, we're on standby, it's the 5th day of voting. How quickly will a name emerge?
Okay, I'm a technical minister, I'm not a voter. So as any other Italian citizen, I'm looking forward to having a high-level profile as a president, and I hope this will be found in the next couple of sessions. I'm not a voter, so, you know, I'm just following the story like you are.
Okay. But do you think you'll still be minister in a couple of months? Do you think Mario Draghi will become president of the Republic?
It's hard to say, but I think Mario Draghi is such a fantastic guy that we should really have him on board in this country. I mean, he's really a solution to many problems, and wherever he will be acting very well. So I just hope he will be around as long as possible.
Minister, thank you so much for joining us. Roberto Cingolani there, the Italian Minister for Ecological Transition. Now, we'll have plenty more, of course, from Rome. We're at day 5 of voting, but we also have a lot of earnings to get through. So coming up, H&M reports pre-tax profit for the 4th quarter that beat estimates, and we talk to the Chief Financial Officer, Adam Carlson. He's up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There are multiple supply chain challenges.
Who knew that global logistics was this fragile?
We have to be careful because we all live in a very, very chaotic world. And uncertainty is the rule of the day.
Supply chains around the world are very constrained. The uncertainties are going to be here for, I foresee it, into 2023.
We have seen shipping and container shipping prices increase by a factor of 3.
We'll see price hikes from businesses to consumers.
And so it's inevitable that some of that will have to be priced through towards the end markets.
The labor market says it's very tight. So it appears that the economy has less capacity than we thought. And so that's why we're in a situation where inflation, has not faded away quickly.
It's coming throughout the business. It's coming in supplies. It's coming in wage inflation, etc. So of course, the key here is to maintain a pricing power and to be able to share that pain with customers.
That will always be part of the discussion from now on.
Inflation, of course, part of the discussion, and those were some of the discussions that we've been having about it on Bloomberg TV. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. UniCredit has posted fourth quarter revenue ahead of estimates on higher income from fees and lending. The Italian company joins rival Deutsche Bank in driving gains to the top line while seeking to keep a lid on wage costs amid the boom in deal making. The revenue gains are a boost for management plans to return almost 3.8 billion euros to UniCredit shareholders in the coming months. Now, Robinhood shares have tumbled in post-market trade after revenue and outlook at the US brokerage missed estimates. The platform slashed its forecast for the current quarter to $340 million, down from $447 million. Robinhood shares were already 70% below its July IPO price. SoftBank has confirmed its COO, Marshall Claw, is leaving the company. The departure comes after clashes with the founder, Masayoshi Son, over compensation and responsibilities. Bloomberg understands Claw pressures for more as much as $1 billion in compensation in recent months because of his contributions, including the turnaround of Sprint and the listing of troubled business WeWork. And LVMH has posted record annual sales with revenue of more than 64 billion euros, topping the previous record set in 2019. The gains by the French company, which owns brands including Tiffany, Sephora, and Christian Dior, highlight the V-shaped recovery experienced by much of the luxury industry, underpinned by recovering economies and soaring asset prices. And that's your Bloomberg Business Flash. Francine.
There you go, Leanne. What do you do? If you have the money and you've been stuck at home for 2 years, you want to splash out, you buy yourself a couture gown, and why not? On to retail, or sticking with retail, H&M has set an ambitious goal of doubling its sales by 2030. Now, that's after the fast fashion retailer reduced discounts and lowered its long-standing inventory buildup. In its quarterly earnings report, H&M this morning also said it aims to cut its carbon emissions in half by the end of the decade. Well, we can find out more about this and the results. We're joined by the H&M's CFO, he's Adam Carlson. Adam, thank you so much for joining us. First of all, we were talking about inflation. A lot of your raw material costs are going up. Have you been able to pass this on to your clients and consumers?
Hey, good morning, and thank you for having me. Of course, we are working closely to secure that we can at all times offer our customers the best combination of price, quality, fashion, and in a sustainable way. given the circumstances around us, we see that we have great opportunities to continue to collaborate with our partners in our supply chain to ensure that we actually have a competitive advantage towards other retailers facing the same situation. So we are closely monitoring the situation, of course also looking into how we, in a good way, can at all times secure our value proposition.
Adam, do you feel like you have more competition now than you used to in some of your core markets, including the U.S.?
I think competition has changed slightly. We've seen that the last couple of years have been challenging for the whole industry, and there are some smaller niche players popping up in many markets, but we still, with our focus on always being relevant for the customer in all parts of the world, we still believe we have a strong setup to create customer value all across the globe.
So when are you expecting us to go back to pre-pandemic levels in terms of shopping at H&M? And does that mean that you're looking likely to open more stores, or are you staying put for the moment?
Right now, obviously, we are happy to see that at least the store closure levels are coming down to a minimum, and hopefully this can then result in that we resume to a more normalized situation. Looking at 2022, we believe that there will be a slight decrease of the store portfolio, but we also see throughout the year then that the channels complement each other really, really well. So we have a good plan, but for 2022, we estimate a slight decrease of the store portfolio.
Are dividend payouts back on track?
Dividend has been proposed from the board to the AGM, and we are happy to see that part also of the capital allocation strategy can be resumed to a more normal level. So yes, dividends are back as part of the capital allocation.
I understand, of course, that, and we've been talking about this in the past, that how to deal with China has been troubling for H&M. Do you feel like those troubles are getting better or worse?
The situation is still complex, and we are working on it, but we prefer not to comment in more detail regarding the development in China at the moment.
But in terms of consumer demand, do you expect to be able to regain some of the market share lost in that, or is it just too soon to say?
No, we're following the situation very, very closely, obviously, and we're working to secure that our consumers in China can still create a long-term relationship with H&M, and we're working on that plan. It's too early to say how that will play out when it comes to market share.
Okay, thank you so much for joining us. Adam Karlsson there, the Chief Financial Officer of H&M, joining us on the back of some pretty solid earnings figures. Now, coming up, Apple sales climbing 11% to a record $124 billion in the first fiscal quarter. Have they conquered the supply chain? That story, our main story, is up next. This is Bloomberg.
would you like to achieve next in Saudi Arabia?
As you know, Barrick has invested in Saudi Arabia already in a partnership with Ma'aden, the state mining company. And we have an investment in the Jabal Saeed copper mine, one of the lowest cost, highest grade mines around, actually. And we have a real commitment to grow our footprint in Saudi Arabia with a particular focus on the Arabian Shield in partnership with Ma'aden. And so after tomorrow, I'm on the way to the mine. So not only how to be at the conference, but more importantly to go and work with our team out at the mine who've really done a great job managing the COVID crisis over the last 2 years.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, we're just getting some breaking news. The Italian Parliament will actually hold 2 votes on the new president today. Now, this is quite a big deal because it means they want to speed up the process. It also means that Mario Draghi could have a better chance of getting it because they still haven't found a consensus candidate, and he's still emerging as one of the favorites. Very quickly onto the papers. I know it is a very murky process, so for our international audience, hang in there. We'll have a name at some point. If it's not today, it could be tomorrow or next week. But some of the papers have been really funny. Il Tempo, for example, with a voodoo doll of Mario Draghi. In political chaos, there's always someone with a sense of humor trying to, I guess, kill off some of the other candidates to become president, which would secure him a 7-year term. Another one is Matteo Salvini, a half-naked Matteo Salvini, going back to one of the scandals of him in a discotheque a couple of years ago, and some of the more mainstream papers, such as Repubblica, just playing it quite straight, also La Stampa, playing it quite straight, just saying we'll have to see, and hopefully we'll have a name pretty soon. Now, on to corporate earnings, and Apple, the world's most valuable company, beat sales estimates, marking a victory against a supply chain crunch fueled by both the pandemic, but also by chip shortages. Well, joining us to discuss all of this is Bloomberg Quick Takes' Alex Webb, who's also a Bloomberg Businessweek columnist on technology. So, Alex, good morning. First of all, how did Apple beat the supply chain crunch? Did we overblow the dangers to it, or did they find a way of securing more chips?
Well, it's a bit of both, actually, that Apple said that iPad sales were perhaps a little less than might have been expected, but that was partly because they were taking components that were intended for iPads and directing them towards iPhones. There's obviously a lot of shared technology between those two devices. We also know that Apple is generally very, very good at managing market expectations. The analyst community had built in about a $10 billion hit from the supply chain constraints. In reality, the company said it was about a $6 billion hit, and needless to say, they beat analyst estimates by $4 billion, so you can see that delta in there. But they do have, a very well-oiled supply chain machine built by Tim Cook.
So does it mean that actually we could see, some of these supply chain crunch also being used for a lot of other technology companies? And what does it mean for stock prices?
Well, I mean, there are other companies that clearly are more, have already been hit more drastically by this, not least Tesla. Apple's supply chain, it's been around for 10, 15 years in its current form. And as I said, it's very, very well oiled. The others, which are a bit newer, don't have quite the same, they're quite aggressive, actually, Apple supply chain operatives at times. They don't have that same, approach. They are already suffering. And of course, there are companies that are purely dependent on their hardware. Apple has services businesses as well.
So, Alex, valuations. How are these tech companies valued compared to some of the broader market?
Well, Apple's valued at the moment about 27 times forward earnings. It is a premium to the S&P's sort of 24 times forward earnings, but not a significant one. If you look at Amazon, it trades at 40 times forward earnings, Tesla 80. I'm not suggesting that Apple's going to go anywhere near to Tesla anytime soon. But the thing that's interesting is as other companies start to recover from the pandemic in a forceful way, we might see some revisions to the upside on their estimates. That means that they will look slightly cheaper, and there's a possibility that some of the some investment cycles out of the likes of Apple and Microsoft and towards those other companies that increasingly look a bit cheap.
All right, Alex, thank you so much. Alex Webb there with some of the tech stocks that we need to watch. I'll be here in Rome, of course, probably throughout the weekend. Certainly we'll be here possibly live on Monday as we await the President of the Republic. We just found out that there will be 2 votes in the Parliament. It's a beautiful but overcast day today, so maybe we get on with business and find a consensus name. In the next hour, Matt Miller and Katie Lyons will be in New York, or Anna Edwards in London. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Lama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
once again, the hallmark of the Fed is they talk a lot tougher than their actions.
What's clear is Powell's very data dependent on the rate path.
I think the one concern that I have, and it's a big concern, is the fallout in the financial markets. We're all flying a bit blind here.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Friday, January 28th. Our top stories today. Apple survives the supply chain crunch. Quarterly revenue easily beats Wall Street estimates, and the company projects that sales will rise by double digits in the March quarter. It may be a fragile end to a roller coaster week for U.S. equities. Investors still trying to figure out the impact of soon-to-be higher interest rates and bracing for an attack. President Biden tells Ukraine's leader that Russia could invade sometime next month. Welcome to Bloomberg Surveillance. This is the early edition. It is Friday. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Kaylee, it seems every time I look away from the European equity markets in the last couple of hours, we take a leg lower. Sentiment not the best this morning.
Well, Anna, it's been like that kind of all week. Every time you look at the equity market, it seems to be in a different place than it was just a few minutes beforehand. It's Friday. Thank the Lord. I am a little bit tired, if I'm being honest, after this week. I think also there was getting a little bit of relief in Asia overnight. Some positive news for most of the equity market benchmarks there. You did have the MSCI Asia Pacific Index up for the first time in 6 days, rising about 0.5%. The one exception to that story was China. The CSI 300, of course, had fallen into a bear market in the Thursday session. Those losses did continue on this Friday, down 1.2%, even though you have state media, funds coming in to buy, trying to support the equity market. But maybe there was just a little bit of selling pressure as people tried to close out their positions ahead of the New Year holiday next week. Now, of course, I did want to point to one individual stock in particular, and that is Hobson Development. Of course, a developer in China, really weighing on property stocks across the board as PwC, its auditor, has now pulled out because they couldn't get sufficient information. And that followed a couple other auditor exits this week, creating some concern potentially about a wider exodus. That stock was down 17% in the session, its worst dropped since 2000. And finally, I did want to point to what's going on in the bond market as well. Broadly, you actually saw sovereign bonds bid in the Asian session overnight. The one exception to that was Japan. The 30-year yield there posting a 3 standard deviation move, up 2 basis points to 75 basis points. You're actually seeing a lot of movement in Japan, which is something we don't necessarily see all that often, Matt.
Yeah, and well, you know what I was thinking? Maybe, Kaylee, we're all a little tired out from this week. Maybe we won't see the kind of volatility and the volume that we have in the last 4 trading sessions. As I was thinking that, I saw S&P futures move down from up. So we were looking at gains. Now we're looking at a drop, still basically unch, but it's a little bit of movement there. The 10-year yield back at 184. Remember yesterday we saw that drastic dropping, and now we're back right where we were on Wednesday. So 183.55 to be exact, which I probably should be with the 10-year yield. You know I get excited about the dollar index. Right now at 1191.76. We're seeing some real strength here, and we had come off our November highs of 1194, but we're getting back up there right now, and I wonder if that's a safe haven bid or if that's just that the whole world expects more interest from the Fed, so they're getting into the greenback. NYMEX crude up right now, 86.95 a barrel, and by the way, Brent crude is trading just under $90 a barrel, so we're watching those levels. Anna?
Yeah, absolutely. More on Brent in just a moment, Matt. We are far more negative than unch here on European equity markets. We started out with some higher expectations, I suppose, but European stocks falling down by as much as 1.6% on the Xetra DAX this morning. We are nervous around the growth story, nervous around the German growth story in particular. That German data coming in showing a contraction in the last quarter. Also nervous around supply chains. More on that in just a moment. Back to the oil story. I've got the Brent price in for you to see this morning, and we are seeing further concerns around geopolitical risk pushing oil prices up again. We actually went up as far as $91 on Brent earlier on in session. So that is where we got to on the oil conversation. And that keeps inflation very front and center, doesn't it? And I was looking at the GMM earlier on, and that column dedicated to commodities all in the green. Electrolux also dealing with its inflation pressures and dealing with supply chain issues. And what that means is unmet demand for a company that makes home appliances. That stock down by just over 6%. LVMH, the luxury goods company in France, that stock performance that's fading as we go through the session. It was much stronger earlier on, demonstrating pricing power, now telling us that familiar story about how strong luxury goods are performing as people get out and travel just that little bit more. Talking of traveling a little bit more, outdoor advertising businesses reflecting some of that return to normality in some parts of the world, at least. JCDecaux over in Paris up by 9.9%, Kaylee.
All right, Anna. Well, of course, we're all excited today is Friday, but we still have to get through the full day ahead, and there is a lot to pay attention to. French President Emmanuel Macron and Russia's Vladimir Putin are due to hold a phone call this morning to discuss those Ukraine tensions. Then we'll still have earnings rolling out throughout the day. Chevron and Caterpillar will cross before the opening bell. And at 8:30 a.m. New York time, we will get a lot of U.S. economic data, including U.S. personal income and spending, as well as that PCE deflator, of course, the Fed's preferred inflation gauge. And then finally, rounding out the economic data at 10 a.m. Eastern time, we'll get University of Michigan consumer sentiment data. Matt, it'll be really interesting to see how sentiment is holding up amid these inflationary pressures and also market turmoil that has had a great wealth effect for a lot of Americans.
Yeah, absolutely looking forward to that, even though it comes from the University of Michigan. Let's get to the world's most valuable company right now, reporting earnings after the bell. Apple, strong results, defied fears of a supply chain disruption. Bloomberg's Laura Wright has the details. And Laura, what were the key takeaways on how Apple was able to achieve results that were so much better than the street's estimates?
They were so much better. What supply chain crunch? On the call, Tim Cook defended Apple's supply chain. We're seeing Apple surging in the pre-market, revenue just shy of $124 billion. EPS smashed, coming in at $2.10. The street's expectation was $1.90. Gross margins at a 10-year high. Apple successfully launching lots of new products. Services, phenomenal growth. Macs, phenomenal growth. We know that Apple is pivoting toward a more services-based ecosystem, and the hybrid shift to working seems to be here to stay. iPads, tablets, disappointing. They were down 14% for revenue year over year, but that's because Apple has been prioritizing components in their iPhones. The regional picture is also interesting, worth taking note. China, a clear outperformer, 21% growth revenue year over year. Japan in double-digit negative territory, suggesting that particular market is saturated.
Okay, so that's the picture geographically then, Laura. How were the results received by analysts, with other tech titans set to report next week, of course?
I spoke with one analyst in the early hours of this morning from Evercore ISI, and for him, look, March is going to be crucial. We may see some potential headwinds there, but some upside later this year. The iPhone 14 is being launched. I was telling Anna earlier, I'm still using the 8. I feel old. Is that embarrassing? Am I far behind the curve? And Apple is entering the metaverse in the autumn. Speaking of the metaverse, augmented virtual reality, next week, yes, we have Meta Platforms along with Alphabet and Amazon. Another big week. The walled garden of advertising in focus and the structural shift to online selling from a number of businesses after the pandemic.
Laura, if you still have an iPhone 8, I'm surprised it's still working. That's actually pretty impressive. Thank you so much to Bloomberg's Laura Wright. And of course, Apple giving a boost to Nasdaq futures this morning after what has been an incredibly volatile week. Bloomberg's Kriti Gupta is joining us now for a technical look at the action. Kriti, how do we even make sense of the last 5 days?
Yeah, well, it's fascinating because you're starting to see the tech just largely under pressure, but it's also dragging the entire market lower. This is going to be a big story, especially when it comes to the SOX index, because Laura was just talking about the idea that the metaverse is the next thing that's getting fueled. But how do you fuel that metaverse? How do you take that next step? Well, semiconductors are a really big part of it, in addition to their use case for things like electric vehicles. So I wanted to take a look at the technicals of the SOX index, because you tend to see the moves in big tech that you're seeing in the S&P 500 magnified in the SOX index. Take a look at this. For going back to a year, the RSI, the 14-day RSI, which is this bottom panel right here, tends to be a little bit of a roadmap for when you see this broader index bottoming out. You saw it over here in May. It dropped down to that oversold position, and now you see a little bit of a bounce back. Same story when it comes to October. And now, once again, we're hitting that same level after a 20% drop in the SOX index this time. The question is, do you start to see the S&P 500 and the Nasdaq in particular follow? At the end of the day, these chip makers really lead to a lot of big tech supply chains, and we know those companies make up the majority of the S&P 500.
Kriti, we felt, the Russia risks weighing on the market since the beginning of the week. How does that show itself in the data?
Oh, well, this is going to be fascinating because it's in the Bloomberg Commodities Index. Everyone is talking about oil, right? A knee-jerk reaction of as much as $10 on a Russian invasion to Ukraine. But no one's talking about wheat, aluminum. Together, Russia and Ukraine make over a quarter of the world's grain supply. Aluminum, a major exporter, is Russia, of course, for, say, cars that, of course, need that to create more of their products. Take a look at this. The last time, 2008, you had this major peak in the Bloomberg Commodity Spot Index. That was post-recession. 2011, a food crisis, once again created by a crop crisis over in Russia. And here we are all the way over here in this kind of spot index, hitting a record high once again. The latest leg higher is coming from really pricing in the risk of that invasion, Matt.
Thanks very much to Bloomberg's Kriti Gupta. Yeah, much broader than just oil. I was looking at palm oil. I mean, that's not a Russia story, but that also trading at a fresh record. Let's stick with the geopolitics, though. President Biden has warned the president of Ukraine that there's a distinct possibility the Russians could invade next month. That is according to the National Security Council. President Biden spoke to Volodymyr Zelensky yesterday. Emily Wilkins, Bloomberg government reporter, joins us now from D.C. What is the detail then behind this warning that we're hearing once again from President Biden, despite the Russians really emphasizing, it seemed in the last day or so, that they're still talking?
Washington is very much gearing up for a potential attack. I mean, you've seen it all this week in how the U.S. has moved in sending troops over to Eastern Europe. And you're hearing it more with President Biden's rhetoric over his phone call with the Ukrainian president. I mean, this is something where you have heard the two of them on different pages on whether or not an invasion is likely. And so that was part of the discussion yesterday, as well as some of the economics. And that's something that the U.S. is really trying to keep in mind here in terms of energy, in terms of gas, in terms of other items that need to get to Ukraine. How are they going to position themselves so if Russia does attack and there are sanctions levied, that Ukraine and other European allies aren't extremely hurt by those sanctions?
Yeah, it's interesting. He seems so sure it'll happen. I'm surprised he didn't use the word imminent in the phone call, Emily. In terms of what's going on with China, we've already seen one bill go through to try and counter Chinese competition. Now there's another, but it looks like there's some GOP opposition. Why is that?
So it's important to note that a lot of this Republican opposition is coming in the House, that this bill, a slightly different version of it, did pass in a bipartisan manner in the Senate. And all that really needs to do for this bill to go forward, because the House and the Senate are going to come together with their different versions, talk it out, and produce something new. So technically, if House Republicans oppose this bill, it means it can still get past the House, it can still go to that conference, and they can potentially come out with a more widely supported bipartisan product. That said, Republicans say that they're not fans of this bill because it's a little more partisan than what the Senate put forward. They feel that Democrats didn't work with them on it. We've heard concerns from Michael McCaul, the head of the Republican head of the Foreign Affairs Committee, and they've put it out there that they really don't think they're going to be able to support this legislation when it comes to the floor. But it'll be, I think, more interesting to see whatever product comes out of those House and Senate discussions, whatever bill they come to an agreement on. That's the one I think more people will be looking to Republicans to see whether there is more widespread support there.
All right, Bloomberg's Emily Wilkins of Bloomberg Government in Washington for us this morning. Thank you so much. And now let's get back to the markets. Take a look at some stocks moving in pre-market trading here in the U.S. Absolutely plunging to the downside is Robinhood. It reported after the bell yesterday. Revenue missed expectations, a greater loss than expected, plus users were down 8%. Revenue per user also disappointing, and as a result, that stock is down nearly 14% before the bell after already being down 69% from its IPO price earlier this year. Another mover to the downside is Western Digital. Supply chain issues a big challenge here as its guidance missed expectations. That stock is down about 8.4%, but it's a little bit of a better story for Visa. Beat on the top and bottom line. Payments volume up 20%. Both Visa and MasterCard really underscoring some strong spending trends. And as a result, that stock is up about 4.6% before the bell, Anna.
Lots to talk about with Dan Ives this morning. We'll be talking tech. We've had a lot of earnings already. We'll get more next week. Dan Ives, Wedbush Senior Equity Analyst, joins us shortly. This is Bloomberg.
think that electric vehicles could reach 10% of the American market by the end of this year?
That's difficult to say, like you said, because it'll be both, not only demand, based on the demand we are seeing for our vehicles, and the rest of the industry is seeing. It feels like the demand is certainly there. But the question will be how quickly can we, all of us, execute to build capacity to meet that demand. And that's what we are very busy doing. Within the next 24 months, we expect to get to about 600,000 battery electric units globally. And that's before our bigger investments that we're making in Kentucky and Tennessee, both for batteries as well as assembly, come online, because they don't come online until about 2025.
I'm Eric Schatzker. Join me for my front row conversation with famed investor and GMO co-founder Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period for 20 years, which I think is ending. We're going to live in a world of bottlenecks and shortages and price spikes, and we have to get used to it and learn to manage our way around it.
Catch the full front row interview with Jeremy Grantham this weekend on Bloomberg Television.
Earnings season is here.
It has been brutal.
A little bit of disappointment in some of the early reporting. Bloomberg is fastest with the numbers and analysis.
This is a mighty crash.
What to buy and what to run away from.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller in New York with Kaylee Lyons, Anna Edwards with us out of London. We are simulcast on Bloomberg Television and on Bloomberg Radio, which is why I don't normally show you a chart. I just talk about the data and then we move on. Obviously, radio listeners can't see what we're looking at, but this is one of those times when I would recommend, as soon as you get to work or as soon as you get near a Bloomberg terminal, log on and type in G#BTV5149, because this chart really is worth looking at. This is the one historical example we have of quantitative tightening and how it affects risk assets. Bonds did, well, the curve flattened the last time we saw quantitative tightening, and stocks were so-so. 2018 was a down year. 2019, we came back. But still, it looks like risk assets have it kind of rough, and that's what the market is worried about right now. Joining us to talk about this is Christine Aquino. She helps lead our markets coverage out of London. Christine, what is this the biggest concern, would you say, the quantitative tightening as far as what the Fed's going to do this year?
Well, Matt, it's definitely that, and it's combination with the rate hikes that we're also meant to be seeing from the Fed. So this is quite unprecedented, the idea of the Fed entering a tightening cycle using two levers in its arsenal. Of course, the quantitative tightening that you mentioned, the process of rolling off bonds from its balance sheet, but also raising those rates, and perhaps raising those rates faster than markets expected. And so it is very much this full blaze tightening cycle that we're seeing here. And it will be really interesting to see how that plays into markets, because of course that will have repercussions for the short end of the curve. Those 2-year treasury yields really ramping up much higher. Potentially we'll have to do much more to reprice this. But then of course the long end of the curve very much reacting to that process of the Fed rolling off bonds from its balance sheet. What sort of maturities will they start looking at initially, and how does that impact the shape of the curve moving forward?
Yeah, absolutely. And then in the last meeting, Christine, good morning, by the way, we heard a lot about the interest rate hikes, not so much about the quantitative tightening and how that plays out and what opportunity there is to steepen the curve with that particular process. So we'll leave that one. Let's get back to Europe, where we are, and think about the growth story here, because the markets were negative already before we got the German data that showed that the economy was in contraction in the last quarter of last year. Quite a surprise to a market that's, well, that data's fallen on a nervous market, I suppose.
Absolutely, Anna, and I think it really does speak to the fragility story of the European economic story still. And with that context, you can understand why the ECB has been very emphatic about the fact that it's not going to raise rates in 2022, despite the fact that its counterparts in the US and the UK are very much heading into the tightening cycle. It is still very much a fragmented sort of economy. Germany, of course, still reeling from the effects of the virus over the holiday period, as well as some of those supply chain issues. And then when you look at it in the context of France and Spain doing slightly better, more on consumer spending, you can really see it's at different paces, and this is the dilemma for the ECB next week.
Do we have to get through the ECB and BOE next week before the equity markets globally can actually focus on earnings?
Well, Kaylee, I think it will have to be a simultaneous factoring in of all of these catalysts. I mean, this is exactly what we already saw this week when earnings season is just starting to kick off. But, we had the earnings catalyst, but of course we had geopolitical risks to consider as well. And then to cap it off, the Fed hawkish surprise and Apple earnings to top it all off. It makes for a really eventful week. And I think next week will be very similar. We'll be hearing from a lot more companies how and we'll see, the real-time effect of inflation and how these companies are able to deal with that, and then from central banks and how they're dealing with that via policy.
Okay, we'll all need a good rest over the weekend, Christine, to prepare for more volatility perhaps next week. Thanks very much to Bloomberg's Christine Aquino. From the Markets Live team, of course, and you can get further analysis from the Markets Live blog. That's on your terminal. MLI Vigo is the function. This is Bloomberg.
Did Delta fundamentally change the sort of infrastructure of hospitals and medicine generally in India, or was this just a short-term phenomenon and things reverted back to the mean?
So it did change. I think from a preparedness standpoint, how the hospital infrastructure sort of geared up for it, and whether it was oxygen requirements. I think most hospitals have put up liquid oxygen plants, temporary plants. Some have put up permanent plants. I think the capacity for oxygen and other, medicines and supply chain has been augmented, enhanced. So from that standpoint, I think there's been expansion in capacity in infrastructure. We've all sort of seen how far we can stretch the envelope.
difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now let's get the first word news. And President Biden says he will fulfill his campaign promise to nominate the first black woman to the Supreme Court. The president says he'll announce his choice by the end of February. Justice Stephen Breyer has formally told the president he will retire in June or July, assuming a successor has been confirmed. North Korea has now confirmed that it's launched 4 missiles this week. The tests include the launch of 2 long-range cruise missiles that could give Kim Jong-un's regime the capability to hit almost all of Japan. Kim has ramped up weapons testing in an effort to signal unhappiness with the U.S. over economic sanctions. The European Union and the UK reportedly are gearing up to sanction new Russian gas projects if there's an attack on Ukraine. That's according to the Financial Times. The sanctions would drastically cut financing and technology transfers for gas facilities. And China and Russia will sign an agreement to build a research station on the moon. The two countries aim to complete basic infrastructure construction for the lunar station by 2035. It's the latest sign that the new race to go to the moon is heating up. Next month, the U.S. has scheduled a major test of its Artemis program, an effort to return astronauts to the moon later this decade. And once again, I say, Anna, to the moon.
Yeah, this time we're not talking about memes, are we? And we're not talking about investment strategy, although obviously a big investment theme still. Coming up on this program, Karim Chedid, head of investment strategy for iShares EMEA. We will be talking with BlackRock about investment strategy. Where do they stand on Europe and European value in particular? This is Bloomberg.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Here is what you need to know. Shares of Apple are higher today. Fiscal first quarter sales and profit easily beat expectations. That's seen as a victory over the supply chain crunch. Meanwhile, Apple forecasts that sales would grow by a double-digit percentage in the March quarter. Apple moves higher in pre-market. It may be a shaky end to a roller coaster week for U.S. equities. Nasdaq futures pairing earlier gains. Investors are weighing the impact of upcoming Federal Reserve interest rate hikes. President Biden has warned the president of Ukraine that there's a distinct possibility the Russians could invade next month. That is according to the National Security Council. President Biden spoke to Volodymyr Zelensky on Thursday. That is a look at what you need to know this morning. Matt, there is a lot going on this Friday as we get ready for the last session of the trading week. It's been a volatile week.
It's been an incredibly volatile week. As I think Kaylee was pointing out, we saw the kind of swings the last couple of days that we haven't seen since 2008. We had 2 days in a row of gains of more than 1.5% and then finish down. Right now, we don't see a lot of movement on the S&P futures. They're pretty much unchanged, although the arrow is red. So if you're a glass half empty person, that's fine. The U.S. 10-year yield is rising. This should be green for the glass half full people out there because the yield is on its way up and the arrow is pointing up as well. In any case, it's red because people are selling bonds and that makes the yield go up to 183.55. 1191, almost 1192 on the dollar index. So the greenback has some real sway. A lot of people out there saying cash rules everything around me right now, unless they want digital money. In that case, Bitcoin is on its way up. But still, you know, I've been telling you the last couple days, we see this range, and we seem to be range bound here. 36,640 is pretty much the same place we've seen Bitcoin every other day this week. Kaylee, what do you see in terms of pre-market movers?
Well, there's a lot of them out there at the moment. Of course, Apple is really the big company story we are following today. Anna mentioned it. Supply chain crunch, no problem. Record quarter on many metrics for Apple. Even if the iPad did face a little bit of a challenge in the quarter, that stock is up 4% in pre-market trading. Not so lucky, though, for Robinhood. You had revenue missing expectations, a bigger loss than expected. Users down 8%. All of that resulting in a 14% decline for the stock, adding to an almost 70% loss it's seen since its IPO. And then, of course, Tesla got hit extremely hard after earnings yesterday. It was down 11.5% in the Thursday session, but starting to see some buying of the dip coming through. Those shares are up about 0.8% as we see Apple really leading tech higher on this Friday morning, Anna.
Yeah, Kaylee, a big focus on tech then, and we are seeing selling in nearly all sectors here in European equity markets. Matt showed us the S&P futures just edging down a touch. Well, we're doing more than that here in Europe. We're down by 1.5% and more in some of the bigger markets here, and most sectors in negative territory. One of the things we continue to be nervous about, of course, is inflation, and for that reason, I'm showing Brent crude here, 89.68, ever higher, it almost seems like, when it comes to the oil price, although that's obviously not the case. But we are moving higher today, 89.68. We've been above $91 in the last 24 hours, so that is something we are certainly watching. Geopolitical risk in the mix there. We're nervous around the growth story, nervous around confidence in the growth story here in Europe. We're also nervous around supply constraints, and that's something that's weighing on Electrolux. They supply household goods, of course, and if they can't get all the chips they need, they can't sell all the product they want to, and that means unmet demand. The stock moves lower. LVMH, a positive story coming through from the luxury handbag and other jewelry manufacturer, a story of really strong pricing power coming through, although the stock performance fading there. One stock performance that's faded a little but still really strong, the outdoor advertising business, JCDecaux, underlining that advertising outdoors seems to be back, certainly when you think about the increased mobility that we've seen from certain parts of the globe as we recover from that pandemic. Let's think about where we go for the equity markets from here then. It's been a really volatile January. One of the themes has been selling tech. It's been getting back into value, perhaps. And I've got a chart that shows exactly that theme and what we can expect to see on value. For those listening on radio, this is showing European value stocks set for their biggest monthly outperformance on record. Is this outperformance by value or underperformance by tech? Either way you look at it, this could be good for Europe if it continues. Karim Chedid is head of investment strategy for iShares EMEA at BlackRock and joins us now. Karim, good morning to you. So how much are you getting involved in the value trade, the European value trade at this point?
I think it's very interesting, the chart that you're showing, the European value outperformance. It's something that we're seeing come through strongly in ETP flows. So where I sit, we're laser focused on analyzing some of the trends from investors in ETP flows because it gives us a sense of what's happening amidst this market volatility of the past few weeks. And the answer is, we're not really seeing a rush for the exit, but we're also not really seeing a significant buy on dip. But what we are seeing is a significant tilt on a sector, region, and factor level. And the beneficiary is really value. So the value factor, inflows are picking up significantly, especially in Europe, especially in sectors that are, cheap on a valuation basis that feature heavily in value, such as European banks. And we're also seeing this come through on a regional tilt with a bit of a preference for European equities coming through in flows at the expense of areas like US equities. Does this have legs? I think it could. It could have legs in the context of the view that we're really here in an economic restart, not a recovery. So any extra growth that gets delayed will come through later, and that's really supporting some of those cyclical plays.
Yeah, Karim, I pull up ETF Go on the Bloomberg to follow these flows, and I see outflows in the SPYs, in your IVV, in the Qs. Where do you see the most pressure here?
The most pressure really is coming through on a slowdown, not so much significant outflows. So again, it's not really a rush for the exit, but not a buy for this. This is the headline that I would take away from what investors are doing at the moment. So it's a slowdown in buying relative to December in US equities and in some of the large cap areas. But having said that, you were talking about the Apple number this morning. We do still like tech. We do still like those quality names, which is why we keep talking about this barbell approach to equities with a look on value and on quality at the same time. And, tech, we did a big analysis the past week on which are those companies that have the best pricing power, that have the ability to withstand tougher margin environment in the context of more sticky, higher input costs. And tech really comes out on top in that analysis. So there's room for both.
What are you expecting in terms of the economy? I mean, we've heard forecasts for single-digit to 15% earnings growth this year. We've heard forecasts for inflation to start coming back off of 7 handle in the second half. But their concern is that the Fed moves too far, too fast, and pushes us into an inverted yield curve and a recession following that.
Yeah, so let's, stepping back and framing this conversation on the macro environment for 2022, we're seeing some trends here already in some supply chain pressures easing, like we did in Apple, except for the iPad figure. So those supply chain pressures easing are really a main driver of why we see the surge in inflation that has been coming through in the first part of the year, likely to start moderating as we progress in the year. So moderating back down in Q2, Q3, Q4, which should help with some of that inflationary pressure. On the growth side, again, this is really a restart at play. And what the restart dynamic suggests is that we're seeing a significant catch-up in growth that's coming through despite some of the tightening that's getting priced in and the tighter liquidity conditions, especially from the Fed. So all in all, what does this mean for the earnings growth question that you were asking earlier? I think it means high single-digit earning growth. It means an environment where we can't rely as much on multiple expansion, but we can rely on a decent but not stellar earning growth environment.
On the subject of inflation, which you were just speaking about, Karim, where are people looking to hedge against it?
Yeah, inflation hedging is a huge area of focus for us. We're seeing this come through in equities on a sector level. Some of the inflation hedges that are coming through are in areas like value again, are in areas like financials. Financials alone has seen $9 billion of inflows in ETPs, in sector ETPs, which have become a growing share of the overall equity flows to show that sector ETPs are increasingly becoming a go-to for selectivity for investors. But we're also seeing this inflation hedging theme come through in listed private markets like infrastructure. Infrastructure equities have become a much bigger theme for us. And then lastly, in commodities. Commodities as a whole come up as an inflation hedge. Gold divides opinion. It's more of a hedge that investors are looking at in a high inflation regime, less so in a moderate one, but it's definitely a talking point.
Karim, thank you very much. Thanks for your time. Karim Chedid, BlackRock Head of Investment Strategy for iShares EMEA. Thanks for spending time with us here on Bloomberg TV. Next up on Bloomberg TV, we're going to talk Apple. Dan Ives joins us, Wedbush Senior Equity Analyst. We'll talk Apple. We'll talk all the other tech news flow as well. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We set all-time records for both developed and emerging markets and saw revenue growth across all of our product categories except for iPad, which we said would be supply constrained. As expected, in the aggregate, we experienced supply constraints that were higher than the September quarter.
Apple CEO Tim Cook speaking yesterday after the company's first quarter sales and profit easily beat expectations. That is seen as a victory over the supply chain crunch. Shares of Apple are higher in pre-market trading. And joining us now to discuss is Dan Ives, analyst at Wedbush Securities. Up early for us this morning. He has an outperform rating and $200 price target on Apple. Dan, was this a case of us overestimating supply side challenges or underestimating demand?
Look, I think Apple really flexed their muscles, not just when it came to the supply chain, but just overall demand. I mean, demand for iPhone 13 is outstripping supply by about 15%. And when it comes to supply chain, remember, Apple's at the head of the line. You know, they have a great view, probably better than anyone else. The fact that it's moderating going into the March quarter, those are words that are going to be heard around the world in terms of, from a street perspective, bullish for tech. And this was just a golden quarter for Apple in face of all these headwinds.
Dan, good morning. What have we learned then from the Apple numbers about the right way, the good things to do to manage supply constraints at this point? Have we learned lessons about the value in being big and having big contracts in place? Have we learned about trading one product off against another, as some people have talked about them doing in the last quarter between the iPhone and the iPad?
Yeah, I mean, look, I think Apple, obviously, because of where they sit on their hardware ecosystem, I mean, they are always going to have more access to chips than anyone else. And of course, that foothold they have in China continues to be so crucial. But they're, you know, even though it's more Teflon-like, they still had about 10 million iPhone units that shifted from December into March. But it comes down to Cook. He's a tactician, him and the team, in terms of navigating the supply chain and making sure that demand is ultimately met. And it just happens. They came out with iPhone 13 that continues to just, you know, globally be a massive seller, best holiday season ever. And China, despite the fears, that's the linchpin of growth. You takeaways here, in my opinion, given the headwinds, this is probably one of the best Apple quarters we've seen in the last decade.
I wonder what you think about this factoid from the story, Dan, that just shocked me. There are now 1.8 billion Apple devices currently in use, up 300 million from 2 years ago. So they've made a huge jump. Is that kind of growth to be continued? Can we expect that to keep up at this pace? And where is it coming from? Is that coming from China?
Yeah, and Matt, it's a great point, because if you look at China, I mean, our estimate is they've gained about 250 bips of market share in the last 18 months in China. Now it's best selling smartphone in China. Haven't seen that in 6 years. I mean, look, I think it just shows iPhone 12, iPhone 13, that tag team in terms of the introductions on 5G, it's really been a rocket ship in terms of demand. Also, 250 million of 975 million iPhones worldwide, based on our estimates, have not upgraded their phone in 3.5 years. So there's huge pent-up demand, right product, right time, despite supply chain. I call it a Mahomes-like performance from Cook last night.
Anna hasn't gotten a new phone since the great financial crisis. How many phones out there are using 5G, and how important is 5G to Apple's growth strategy?
I mean, 5G, it's the hearts and lungs of the growth strategy. And it's not just from iPhone 13. You know, look what's happening across the board in terms of them now producing their own chips. And you look at 5G today, that's still only about 8 to 10% of overall bases is really now upgraded to 5G. So as this goes forward, it continues to be our thesis. It's a renaissance of growth in Cupertino. You know, we could argue valuation all day, but I believe this is a sum of the parts valuation between services, which is Rock of Gibraltar, we think worth 1.5 trillion. And in a market that's just been nervous, white knuckle backdrop, this is the news the street needed to see, along with Microsoft earlier in the week, that I believe reverses the tech trend. Haters will continue to hate, but I think 6 months from now, Apple is north of 3 trillion sustainable as a market cap.
Okay, Matt was exaggerating, but he does have a point, and so do you, Dan, about the number of people who haven't recently upgraded, me included. Let me ask you about the unanswered questions, though. You think that we've learned a lot this week from Apple and from Microsoft, answered a lot of those questions around tech, and you think we're kind of back to the races there. What is the big unanswered question for next week, then, as we go into the earnings story there?
Well, I think it's the supply chain, and I think that's the missing piece. Look at Tesla. Tesla called out supply chain. I think that was more of conservatism. Apple is moderating. Now, next week, we look at other chip players as they come out, other software names. It comes down to this, our view. Software and chips lead tech higher. Work from home names will fade. You can't put them all in the same bucket. And I think tech is way oversold here. And in our opinion, you look at Apple, this is going to be that life raft in a market sort of turmoil that I think turns around tech. And it's, again, it goes back to when Cook talks, everyone listens. he and Apple have the best view of the supply chain as anyone globally.
Okay, so we'll listen to him. I'm also listening this morning to the CEO of ST Micro talking about no easing of the shortage of chips until 2023, but that's them talking about that specific type of chips they make. Dan, we thank you very much for your time. Dan Ives, Senior Equity Research Analyst at Wedbush Securities. We appreciate the early mornings with us. Now, the Italian Parliament is set to hold 2 votes for a new president today. We're live from Rome next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now, Italy is entering day five of voting for a new president. Lawmakers still haven't managed to agree on a new president after a 4th round of voting, a sign that it will be harder than initially thought, perhaps, for Prime Minister Mario Draghi to get that job. What does that mean for the international audience? Bloomberg's Francine Lacroix is still with us from Rome. The longer this takes, the more time you get to spend in Rome, though, Francine. But tell us, are we nearly there yet?
Win-win. I know everyone's distracted. I feel like the parliamentarians may be distracted by the good coffee and the beautiful views. The longer this takes, I think probably on balance, the chance of Mario Draghi becoming president increase. So he would leave the prime ministerial road just because it means, Anna, that it's more difficult to find a consensus candidate. However, we also found out moments ago that there will be 2 votes today. So it does seem that lawmakers want to get on with it. So every time they vote, it means that they have a better chance of actually finding a name. If it's not President Draghi, then we'll have someone else. A number of names have been floated, but they change very, very often.
Remember the espressos we had in Bari? For what was that, the G7, the G20? They were delicious.
Everything's delicious. And of course, there's an inflation, dimension to every espresso here in Italy.
In what sense? Like they're more expensive, or you just need more of them?
Yeah. I mean, both, but actually they are more expensive, which is why a lot of people are saying, look, this is a disaster. They used to be €1.20, €1.10 in certain parts of the country, and they're now up to $1.50. And this is actually a political hot potato, Matt, because Italians, you know, cannot live without their espressos, and this is also front page news of a lot of the papers. In fact, if you look at the papers, Matt and Anna, a lot of the focus is on, I mean, look at this. This is fun. Mario Draghi with a voodoo doll, hoping to get it. This is the front page of Il Tempo. And then page 2 and 3, they talk about inflation and they talk about the espressos. We also have another fun one with Matteo Salvini, who could be the big winner if we go to early elections. I mean, there's a picture of him half naked going back to a scandal at a discotheque that happened a couple of years ago. But again, it's all of these, you know, major political parties that are trying to find, dealing with inflation and also finding the next president of the Republic of Italy.
All right, so a little bit of continued volatility there for the Italian political situation, but we all wish we were there with you in Rome. Francine Lacroix coming to us live from the heart of Italy. We are also watching a number of other things this weekend. I'm watching the snow. Apparently, we're going to get like a foot of snow here. I'm not sure if that's meant for actually, you know, in Manhattan and New York City, because that things just grind to a halt when you get that much snow here. But it seems like it could happen tonight into tomorrow, and hopefully it's all cleared up by Monday so we can get back to work, Anna.
Hope you have some good indoor weekend plans then, Matt. I'm watching geopolitics, global geopolitics, of course, tensions with Russia. We've heard from the Russian Foreign Minister, Sergei Lavrov, sounding a little more conciliatory, talking about the being receptive to the U.S. proposal. It involves some rational elements, he says. This coming just as President Biden, of course, has been warning the Ukrainian president about invasion next month. That's what the U.S. line is at the moment. At the same time, they talk financial support. So we'll watch that, of course. We're also watching the markets, though, watching Nasdaq futures fading just a little. The closer we get to the US session, the further we get through the European session, which is now down by 1.5% on the Stoxx 600, the more we fade on Nasdaq futures. The Apple effect, we'll see how long that lasts. More Bloomberg surveillance is ahead. We'll hear from Dean Kernert of Macro Risk Advisors and Anna Han of Wells Fargo, amongst other voices. They will keep you in touch with all those market moves. E-minis down 0.3%. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
that capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
We're stuck in this phase of market limbo.
The next couple of quarters, the margin pressure is absolutely extreme, isn't it?
We do have and continue to have a pretty positive view on growth going forward.
There's been a lot of repricing in the market, but I'm still a seller of rallies.
We've done enough on the downside, whether you're bullish or whether you're bearish. We've done enough here in the near term to catalyze a bounce.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The equity bounce fades just a little bit from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz and Katie Lyons. I'm Jonathan Ferro. Your equity market on the S&P down 0.2%. We fade as this session progresses, Lisa.
Yeah, we've been doing that throughout the day from a lot of sessions in a row. And the question that I have is, how much further does the repricing have to go? I was looking right now. The Nasdaq is down 14.6% year to date. That is the worst monthly performance going back to October 2008.
Down 3% on the week on the Nasdaq 100. I'll catch up with Brian Levitt of Invesco a little bit later. This is his line, Lisa. Persistent inflation despite policy tightening. That would be my nightmare. You've talked about that repeatedly. The prospect of that over the last 12 months.
How much does the inflation narrative get away from the Fed? How much can the Fed not necessarily tackle some of the inflationary pressures if they can't deal with supply chain disruptions? And frankly, how are they going to quiet the momentum that we're seeing in the housing market?
We've got to talk about the earnings too. I'm going to touch on LVMH a little bit later this hour. There are some stunning numbers from the luxury goods maker. But then we've got to talk about Apple, Kaylee. Dan Ives of Wedbush saying you can frame it.
Yeah, absolutely. I mean, this was a stellar quarter for Apple, even in the face of all of the supply chain challenges we were talking about. It blew it out of the water on everything except the iPad, where you did see that show up. But this is a company, $124 billion in sales in one holiday period, John. You are seeing Apple react to that, even if NASDAQ futures are off their session highs.
That's helping the NASDAQ still. Let's whip through it and get through the price action as we close things out for this trading week, which feels like a trading month. And the month itself feels like a quarter or maybe a year. Equity futures on the S&P, we are down 5. We are negative a little more than 1/10%. On the Nasdaq 100, we stay elevated. We stay in positive territory. We're up 0.4%. Let's call it a third. And yields drifting higher again on the long end. We're up 3 or 4 basis points on 10s after we saw a lot of flattening come through this time yesterday. Your 10-year yield right now, Lisa, 183.55.
I will say a lot of people are exhausted, to your point. It has been a very long week. It has been an even longer month. However, what I think might be the most interesting moment of the week comes at 8:30 a.m., and that is for the fourth quarter employment cost index. If you remember, this was the index that really keyed off some of the pivot that we saw in the December meeting from the Federal Reserve as it surged to the highest level in decades. At what point is this going to be what informs the Fed more than anything else? We also get personal income and spending for the month of December. To me, this is where the question lies. How much do we see a decline in spending, even as we see that core PCE, that key figure, that key metric that the Fed looks at surge to the highest level also in decades. At 10 a.m. we get the University of Michigan January sentiment survey. This is the difficulty right now. How much does inflation becomes a decelerator itself as it really invades people's confidence in the outlook ahead? How much do we see an ongoing deterioration? How much does this really confirm the view that we see from some people who say that they think that the Fed is perhaps going prematurely? I'm thinking of you, Danny Blanchflower. And at 1 p.m. we get the Baker Hughes U.S. rig count. So the oil price is really a key factor right now, John. It's surging to the highest levels going back to 2014, and the shale producers are the marginal producers that have not been coming back online. They have not recovered full production. How much do we see them ramping up versus that fiscal discipline that was really injected after the 2014 crash? John, without that production, how much does it allow prices to really be at the mercy of OPEC Plus with all of the geopolitical tensions right now?
Lisa, I love Danny. You know we're good friends. But when does he think a rate hike is justified?
I know.
What does he need to see?
You know, it's a fair question. He's getting to something, though, that a lot of people are keying in on, which is people are spending less on a real basis. It may keep declining, especially if people feel like their wages are not keeping up. So either you get a wage spiral or else you get this real deceleration, a sort of stagflationary kind of environment. How does a Federal Reserve deal with that?
We get Danny on the show next week.
Yeah, I would like that.
I would like that too. Let's sort that out. Your two-year yield, 121 on twos right now. Yields higher again at the front end by a couple of basis points. Let's get to Dean Kerniff, founder and CEO at Macro Risk Advisors. Dean, I remember about a year ago, maybe 9 months, whatever it was, you turned around and you said, it's just transitory. Is the new subprime is contained. Dean, what did you see in the data that you think other people got wrong?
Well, what I saw was a relationship between the markets and the Fed that was so linked to this notion that the Fed is infallible. And of course, you know, the Fed's got legions of PhD, tons of data. They're very well-meaning, you know, highly apolitical public servants. But when I just think about the presaging of the period before the 2008 crisis, I'm just reminded of this notion that subprime is contained and the degree to which they truly believe that and misread in an epic fashion some of the warning signs that were in plain sight. Inflation is different, of course, than a subprime contagion, but the similarities are that the Fed has misread the degree of inflation, this notion that it is transitory, and that its strategy is simply to wait and hope. And as they say often, hope is not a strategy. And I think what we've learned this week in a very unwelcome fashion through all the volatility is that this intertwinement of the Fed and the markets is at an all-time high. It's extremely unhealthy. And the Fed's crowd control efforts, I like to say the Fed specializes in crowd control, they're coming undone and they're being compromised by this thing called inflation.
All right, well, when you say subprime is contained, the key difference between that era and this era, frankly, is credit. The credit markets are completely behaved. And a lot of people have pointed to that to say, even the volatility that we're seeing right now is being controlled. It's crowd control because it does not feel unmoored from some sort of ability to rein it in. Do you think that credit markets have lost their ability to be a leading indicator for the distress in the broader economy and markets?
I think you can make some of that argument that the Fed has done so much and it's such a part of the fabric of the market prices that we just can't get the right signals. I'd say as well, though, that you're right, that credit hasn't really been a big part of this 15-ish% drawdown in the S&P. But I think that's actually kind of part of the problem for equity investors. The Fed will respond to plumbing issues in rates markets, in credit markets. It does come to the rescue in the name of you know, justifying this market functioning oversight that it has. And we're not seeing that sort of plumbing issue in credit. And that becomes, frankly, a problem for equity markets. What we're doing here is we're just burning off so much of the froth and the valuation excess that came about through the combination of just incredible fiscal response to the pandemic, justified but significant, and then the Fed just going too far and waiting too long. So Lisa, from the equity markets perspective, in some ways, credit market risk off would be a good thing because it would usher in more Fed response. It would actually raise the Fed put strike, so to speak. And my concern here is that the Fed's risk management objectives, which from a disinflationary standpoint, where they were always trying to get to 2% from below, those were very pro-market. Markets hit the skids as the economy hit the skids, and you've got the air cover of low inflation. It's just so much different from now, where if things start to get a little dicey, we've got the high inflation. It just complicates the Fed's response.
Dean, are you basically saying that there's not a Fed put for equities, but there is a Fed put still for credit?
There is, yeah. I mean, listen, in a pinch, the Fed will and should be there. I think that's frankly just a long ways away. I think that's the issue. Now, when we step back and we look at the damage done to equity markets, we all should start to say, okay, well, at what point do you get to a tradable bounce? The VIX doesn't stay in the 30s forever, so the price destruction tends to solve itself and set itself up for a rally. But my concern is we're just in this, still the early stages of a recognition of a wholesale regime shift where the Fed's duties to be a risk manager of inflation force its hand, and it's an anti-market set of policies in risk managing inflation.
With that in mind, do you think we've already seen capitulation, or is that yet to come, Dean?
You know, I think when you get to a VIX of 38, which we got to earlier this week on an intraday basis, it's hard not to say we're not close. You know, so capitulation on the violence of the moves is one thing. And I think we worked through a lot this week. If you look at the realized volatility statistics, they actually incredibly underestimate what really happened this week. We know about these just giant intraday reversals. So I say on that sense, closer. And I think that there are some trades for folks who need to be long the market that can monetize volatility. I was just looking at the S&P 500. Fully a third of the stocks in the index have a 3-month downside put implied volatility higher than 40. That's very high. So you can use that if you're trying to get long the market. You can use those premiums as a way of getting into some of the delta exposure you want to in the market. Again, though, my longer term concern here is that we just haven't fully appreciated the degree of tightening. As Bill Dudley says, we're just so far from anything close to normal. We're still doing QE, and the market hasn't fully priced that in.
He said that on this show. Dean, always wonderful to catch up with you, buddy. As always, Dean Kerner there of Macro Risk Advisors. To Dean's point, Lisa, we're still at the very early stages of what he calls a regime shift. I think it's difficult to get your hands around the degree of tightening we actually need from the Federal Reserve. The Federal Reserve themselves, I still don't think, have recognized how much balance sheet reduction will actually impact what we're talking about at the moment, Lisa. They've still got to figure that out, and they still haven't done anything. We're just talking still.
And we haven't necessarily seen the global tightening cycle that we're expecting later this year, because it's not just the Fed reducing their balance sheet, and it's not just the Fed hiking rates.
Lisa Bramwitz with Katie Lyons and Jonathan Ferro. TK having a nice long weekend. Futures down 13. I smile because I know you're there, Tom.
I know, me too.
Futures down 13 on the S&P. We're down 1/3 of 1%. On the Nasdaq 100, up 0.2 of 1%. Yields higher across the curve on 10s, 183.91. From New York City this morning, good morning on radio, on TV. This is Bloomberg.
With the First One News, I'm Ritika Gupta. Russia's Foreign Minister Sergei Lavrov says he saw some rational elements in the U.S. response to Moscow's security demands, but Lavrov said key points were ignored. Lavrov's remarks came after President Biden warned Ukraine's President Volodymyr Zelensky that a Russian attack was possible next month. They also discussed ways the U.S. could help Ukraine's economy. President Biden says he will fulfill his campaign promise to nominate the first black woman to the Supreme Court. The president says he'll announce his choice by the end of February. Justice Stephen Breyer has formally told the president he will retire in June or July, assuming a successor has been confirmed. And North Korea has now confirmed that it's launched 4 missiles this week. The tests included the launch of 2 long-range cruise missiles that could give Kim Jong-un's regime the capability to hit almost all of Japan. Kim has wrapped up weapons testing in an effort to signal unhappiness with the U.S. over economic sanctions. It will take Hong Kong at least 6 weeks to vaccinate 90% of its population if the current pace holds. That means it could be in the middle of March before the city could start easing some of those restrictions, such as those on restaurants, bars, and gyms. Hong Kong's vaccination rate is one of the lowest in the developed world. And shares of Apple are higher today. Fiscal first quarter sales and profit easily beat expectations. That's seen as a victory over those supply chain issues. Meanwhile, Apple forecasts that sales would grow by a double-digit percentage in the March quarter. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
I'm Eric Schatzker. Join me for my front row conversation with famed investor and GMO co-founder Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period for 20 years, which I think is ending. We're going to live in a world of bottlenecks and shortages and price spikes, and we have to get used to it and learn to manage our way around it.
Catch the full front row interview with Jeremy Grantham this weekend on Bloomberg Television.
From New York City.
In London, in Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
Earnings season is here.
It has been brutal.
A little bit of disappointment in some of the early reporting.
Bloomberg is fastest with the numbers and analysis.
This is a mighty crash.
What to buy and what to run away from.
Bloomberg, the fastest numbers and analysis you trust.
Our intention is to not play games. The president's intention is to consult with members of both parties, and his intention is to nominate a qualified candidate who, after completing a rigorous process, who is worthy of the excellence and decency of Breyer's legacy.
Jen Psaki there, the White House press secretary on the opening seat on the Supreme Court. From New York City this morning, good morning. Alongside Lisa Bravitz and Kelly Lyons, I'm Jonathan Ferro. Your S&P 500 is down 22 points. We're negative about 0.5%, just rolling over into negative territory. It's the Nasdaq 100. We're down 24 now. We're down 0.2%. That's where I want to sit just for a moment. Making up about 12% of the Nasdaq 100. One single name, it's Apple. Switch at the board and get to Apple in the pre-market. This had a really nice pop coming out of numbers, coming out of earnings, quarterly results. The stock is now just up 3%. So that rally now, Katie Lyons, is fading, and fading fast in the last 20 minutes.
Yeah, we've really seen sentiment turning. Of course, this also comes as yields are right around the highs of the session, so that may have something to do with the tech complex as a whole. But it's interesting. I'm just reading the note fresh out of Dan Ives over at Wedbush saying that the commentary on the call from Tim Cook saying that the supply chain issues look better in the March quarter should be a positive read-through across the technology sector, and yet that's not really what we are seeing taking shape this morning.
Elisa, if those numbers can't give a helping hand to this market, what can?
Honestly, just simply inflation data that comes out weaker than expected. At a certain point, we are seeing a repricing as people try to understand what we're pricing into the future and what kind of rate regime we're pricing into the future. How do you even begin to do that?
Down 0.2 on the Nasdaq 100. Looking forward to that data in about 2 hours and 10 minutes. Joining us now from DC, Emily Wilkins of Bloomberg Government. Emily, today there's a call between the French and Russian leaders. Yesterday there was a call between the US and Ukrainian leaders, and there was some confusion about the outcome of that call with the President of the United States. Emily, what are we learning about what's being said by either side at the moment?
Yeah, so the White House came out and said that the call was a productive one, but now we're hearing from a top official within the White House. CNN's reporting that there was disagreement between President Biden and President Zelensky over exactly how imminent this threat from Russia is. And this really plays into this larger narrative we've seen of the U.S. and some of its allies just not being on the same page. The U.S. is saying that an attack could happen at any point, but you haven't seen the Ukrainian president really agree with it or promote that message. And it just goes to show that as all these, everyone's trying to get on a unified front against Russia, they're just not there yet.
What actually happened, Emily, with the phone call between President Biden and the president of Ukraine, which seemed to be sort of hastily organized?
So we definitely know that there was a discussion, a long discussion. It was more than an hour on the phone. They talked about the economy. They talked about potential sanctions, potential aid to Ukraine. That's certainly something that's being considered by lawmakers. If Russia does invade, if sanctions are levied, how do they make sure that they are still supporting Ukraine at this time? So we know that that was definitely a component of the call. And for the record, the White House has denied CNN's reporting that there was a disagreement between Biden and Zelensky over exactly how imminent this threat is.
This discussion, how much does it actually ignite some of the tensions further between Russia, since it just seems like it's getting closer to the NATO integration that really is triggering them?
Well, at this point, the White House is saying that they are trying to keep the diplomatic solutions open. They did provide that sort of written response to some of Russia's demands as far as NATO, as far as military action. And we know that Biden is still sort of looking for that diplomatic off-ramp. You're seeing that with his calls for more discussions from more world leaders getting together, trying to figure this out. But the rhetoric from the White House really has been at this point that they do feel like an attack could happen at any time. That's what we heard from White House Press Secretary Jen Psaki yesterday.
Well, I was speaking with the Ukrainian ambassador to the UK earlier this week, and he said the problem with the really harsh rhetoric with countries like the U.S. pulling their people out of Ukraine is it creates a lot of fear among the Ukrainian people that an attack indeed will be imminent. So that may be part of where this disagreement is stemming from. But the reasoning for the harsh rhetoric is the Biden administration being so firm so that Vladimir Putin feels more political pressure, and therefore they might not have to take the action that they're threatening.
That's absolutely been a part of the U.S. strategy, to have this firm stance, to have a united stance. I mean, you even see that in this very partisan and divided Congress. You've heard from lawmakers on both sides of the aisle that they recognize that any action they take as far as sanctions on Russia needs to be bipartisan because they don't want to seem divided on this particular point. And so, yes, this is a strategy for the White House to come across as aggressive as they possibly can, as ready to move, but they've also made it clear that they are trying to continue talks and continue negotiations, and that they haven't closed that diplomatic channel yet.
Obviously, we're focusing here on the conversations between the U.S. and Ukraine, with the U.S. messaging towards Russia. But what about between the U.S. and its Western and NATO allies? We know that Emmanuel Macron is going to be speaking with Putin later. How much consensus is there between the Biden administration and European leaders?
Well, we have seen that there has been differences between Biden and European leaders on where they stand, on what they're willing to do. You've heard various types of hesitancy, and you have to realize that the situation between the U.S. and Russia, very different than the situation between Europe and Russia in terms of trade, in terms of gas, in terms of energy. And you've seen the U.S. start to think a little bit about how they can make sure that their European allies, as well as Ukraine, can really not be hurt if sanctions are put on Russia.
Emily Wilkins, thank you. Our Bloomberg government reporter down in Washington, D.C. Just to tidy this up a little bit, Lee, so you saw the reports in the last 24 hours coming from some organizations, in fact one, suggesting a Russian invasion was almost a virtual certainty, according to the president. We had that cleaned up by Emily Horn, the spokesperson for the White House NSC, who said the following: this is not true. President Biden said there is a distinct possibility that the Russians could invade Ukraine in February. He has previously said this publicly, and we have been saying this and warning about this for months. That's the official, on-the-record statement from this White House, Lisa?
It is really hard to game out what's real, what's rhetoric, and frankly, whether there's any kind of cohesive understanding of the U.S. approach right now. I mean, honestly, even the Ukrainian call, we didn't really get a sense that it was happening. We didn't really get a sense of what was actually spoken about or what the motivation was, other than to express support.
And for markets, to be clear, this is not the big focus right now. The big focus this week has been the Federal Reserve. Wells Fargo out with a call just moments ago. They published, Katie, here's the line. We now think the FOMC will hike by 125 basis points by the end of the year, and that it will announce the commencement of balance sheet reduction in the July meeting. So we've come from, say, 2 maybe this year, then to 3, then to 4, and very quickly to 5.
Yeah, it's been fast moving, John. And I was talking to Mark Cabana over at Bank of America yesterday. He said we could even get out to 6 or 7 this year, because if that's where market pricing goes, the Fed may not tell the market it's wrong and go ahead and take the leeway to do that. We have seen a dramatic ramping up of expectations. My question is, are we still underpricing the Fed, or are we now overpricing it?
Equity futures right now down 0.4% on the S&P. Let's whip through it and get you up to speed. We're down on the Nasdaq very briefly, and now unchanged and clinging on to gains. Outside of that, in the bond market, yields higher across the curve on 2s and nicely through 120, on 10s through 180. Your 10-year up 4 or 5 basis points to 184.45. Crude bouncing back by 0.6% to $87 and around about 12 cents. From New York City, on radio, on TV, for our audience worldwide, this is Bloomberg.
What would you like to achieve next in Saudi Arabia?
As you know, Barrick has invested in Saudi Arabia already in a partnership with Ma'aden, the state mining company. And we have an investment in the Jabal Sayed copper mine, one of the lowest cost, highest grade mines around, actually. And we have a real commitment to grow our footprint in Saudi Arabia with a particular focus on the Arabian Shield in partnership with Ma'aden. And so after tomorrow, I'm on the way to the mine. So not only how to be at the conference, but more importantly to go and work with our team out at the mine who've really done a great job managing the COVID crisis over the last 2 years.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Live from New York City for our audience worldwide on TV and radio. Here's the price action right now. On the S&P, we drop lower. This rally fades just a bit. We're down 13. We're negative 1/3%. On the week, the Nasdaq 100 down 3 percentage points. Just about holding on to gains right now after yesterday's move lower. Up 9, up 0.1%. Remember the weightings here. 12% of that index is made up of Apple. Apple's still up by a little more than 3%. Really nice numbers. Still doing okay. Just about holding on. Talking of just about holding on, a 5% move at the open over in Europe. I'm talking about LVMH, and then that move just fades. Look at it now. It's basically unchanged at 0.4%. Lisa, you can't buy a rally for some of these names right now. You go back to 2019. I'm talking 2019. Revenue growth, organic revenue over at LVMH in the fashion and leather goods division is up more than 40%, not from last year, from 2019. And that's where we end up.
Right. So what are the fundamentals and how do they relate to the pricing at a time when it does seem to be that risk off is getting a little bit more on a macro level? It's not just isolated to specific names anymore, John.
We're trading off the bond market and have been doing that through much of this year so far. Let's look at that. 2s, 10s and 30s. 2s is where we've seen a big move, haven't we? Through 120. Right now 121.61 and up another 3 basis points. On 10s up 4 or 5 basis points to 184.45. And seemingly we're all playing catch up here. Lisa, Wells Fargo in the last 24 hours, they got a 5 hikes this year, 125 basis points worth, and balance sheet reduction starts in July. Is that basically where the market is at now?
Yeah, I mean, honestly, 5 rate hikes are being priced into the market right now through the end of the year. There's a feeling that the Fed believes the economy is incredibly strong and that, frankly, there is no risk to the economy for them to hike rates that many times. However, it does seem like inflation is an increasing risk, both politically and economically, for them. Rubeela Farooqi actually disagrees with the Fed's assessment of the way that they've portrayed the economy. She's chief U.S. economist at High Frequency Economics, and she joins us now. Rubeela, why do you disagree with the positive assessment of the U.S. economy that we heard from Fed Chair Powell?
Good morning. Thanks for having me. You know, we don't really see the impetus to growth this year that we saw last year or, during the pandemic, the fiscal drag and what we're seeing with incomes and wages, inflation being where it is, high prices eating into household budgets. So, as it is, we're coming into 2022 on, much slower momentum. And we're trying to really assess whether this is demand organically slowing already earlier than what we thought. We already were expecting a slowdown in the second half of the year. And now, it might be happening sooner. So that doesn't mean that the Fed is going to abandon its, where inflation is right now, they really have no choice but to move on rates, but to move away from emergency support and accommodation. But I do think that there is a risk to growth, especially in the second half of the year. And I do think that there's a risk that the Fed, what's being priced in the market is a little more aggressive than what we think is going to happen.
There are a number of different ideas in here, Rubeela. What does the Fed do if you see growth slowing down materially, but you see inflation continuing to rise or keep at this pace or not even decelerate as much as they expect?
Right. And that's the risk, right? Because if we look at just our base case right now, and look at the next few months in terms of the January CPI data, we actually do think that we're going to see a slight acceleration. So I think the Fed is in a very tight spot. It's a matter of figuring out, their overriding message right now, their agenda is they have to address this inflation problem. Now, their actions, everything comes with the monetary policy actions come with a lag. So these actions are not going to necessarily address anything that's going to happen in January, February, and March. But we do think that they're in a position with the economy growing, at a very, at a more modest pace, but still above potential for 2022. I think what they can do is they can front load these rate hikes. They can actually, maybe move at the next 3 meetings and then take a step back to assess. By that point, they expect growth to slow down anyway, and they expect inflation to slow down as well. So that might give them some breathing room. That is our assessment right now.
Front-loading potentially next 3 meetings. A 50 basis point hike in March, is that on the table for you, Rubeela?
Not for us. I mean, I do think that unless something really goes wrong on the inflation front, if we start to see inflation move up in a very substantial way further, maybe towards 8%, nothing's off the table really, but I do think that I'm not really expecting to see a 50 basis point hike at the March meeting.
Okay, well, let's talk about the factors in that inflation data. Wages. I just am looking through Caterpillar earnings that just crossed the wire. They talk about higher labor costs that they are facing, one of the supply side challenges that many companies are dealing with. Do you think we are at the cusp of or already in a wage price spiral?
If you listen to the Fed, that's not what they believe. That's not what we believe. I do think that there's a lot of other dynamics in play here, including the fact that we are just not seeing labor supply coming back. So, if the base case is that the labor market is going to continue to improve, job growth is going to continue, and if your base case is that as savings and as savings diminish, and you're seeing declines in real earnings, real wages, real disposable incomes, as those factors, creep into the household psychology, that people are going to come back into the labor market. And if they do that, if that supply eases, then we do expect to see some relief on wages as well.
Rubila, there's a question about how much the Fed can actually affect inflation right now, based on the fact that a lot of these impulses are out of their control, whether it's people staying home to take care of sick people or children, or whether it's supply chain disruptions that have to do with China's zero COVID policy. So what's the transmission mechanism if what we've seen so far isn't enough with respect to the market sell-off?
The transmission mechanism is a very strong message on inflation. And this is what they've done. They've really pivoted. They've said that we are going to do whatever it takes to get inflation down. And that really is something that they want to do via the inflation expectations. They want to make sure that inflation doesn't get entrenched. They want to make sure that inflation expectations remain anchored at 2%. So I think right now the Fed can do nothing about supply chain issues. What they can do is they can impact demand. Demand may already be slowing. We're looking for signals for that. We're already seeing a deceleration, sharp deceleration in spending. So these are the things we're watching. But from the Fed's perspective, inflation at a 7 handle is just not acceptable. They have to send a very strong message about that.
There was a Bloomberg Economics piece out yesterday where they talked about how last year the group of 7 central banks contributed $3 trillion of bond purchases to the overall economy. That number will shrink this year to $330 billion because of all of the reductions in quantitative easing. How do we factor in the global tightening cycle in terms of the ramifications and the slowdown and the subsequent higher financing costs in the United States?
Yeah, and I think that is probably something that is also underappreciated because, global economies have not really performed evenly. The U.S. has been, at the forefront. And I do think that as you see this impulse fade, it's going to have ramifications for the, worldwide. So I think that's a little underappreciated. And I do think that also limits how far maybe the Fed can go in terms of, when they're considering policy normalization. So, in terms of 4 Fed rate hikes, 5 rate hikes, I do think that we have to remain focused on the fact that the Fed has to address this inflation problem now, which means that they are going to send a very aggressive signal, in the front half of the year. But I'm not really sure, that, if we get to the middle of the year and we expect to see growth slow down and inflation slow down, I think it's going to be a different picture policy-wise.
Different picture just in terms of the rate hike mechanism of policy transmission, or also in terms of when they may start to run off that balance sheet, Rubila?
I think balance sheet reduction is, they've been very clear about that. It's going to start later this year. I wouldn't be surprised if they do start in July. They do want to move away from what they're doing, right? I mean, that has been very clear in their message. They want to start normalization. They end asset purchases, start normalization, and start balance sheet reduction. So, in our view, listen to what they're saying, don't fight what they're saying, and this is their message.
Rubila, wonderful, as always. Rubila Faruqi there of High Frequency Economics. We've talked a lot about the Treasury market and what the Fed will and won't do. Katie Lyons, let's talk about the gilt market over in the UK as well. A move on twos.
Yeah, to the highest level in a decade, 1% on the 2-year yield. Really seeing a lot of movement on the short end across the world. And what we heard from the Fed this week, John, may make the BOE next week all that more interesting as the market prices up, ramps up expectations of what they're likely to do this year. This is not just a Federal Reserve story.
Can the ECB sit this out? How many times have we talked about this on this program, Lisa? Did you see the survey that came from Bloomberg from us a little bit earlier today? So we survey a bunch of economists. When do you think the ECB is going to hike? It's more than a year and a half away. Can the ECB sit things out, Lisa, for that long?
Given how much inflation is going up, it's kind of hard to imagine that they can. And given the fact that there's going to be a tightening cycle in the United States, what does that do with respect to their currency, to the pound? To me, I just wonder how we factor in the fact that we're seeing this tightening all around the world and the magnification of one another as this really gets going.
Euro dollar right now, 111.30. The German data this morning was dreadful. Let's be clear about that. The quarterly numbers out of the biggest economy in the Eurozone, Kaylee, just not good enough. Downside surprise. Some people talking up technical recession. Maybe we can bounce out of it. There's the hope that the inflation story fades. And for that reason, perhaps the ECB can wait. Perhaps they can wait it out.
Well, that may be the message that Christine Lagarde is trying to push you. Also, in terms of the euro area data, solid decline in confidence, John. My question is, as the year progresses, is that going to be a harder thing for Christine Lagarde and the team to reconcile? If everyone else is tightening and you're the only one left standing, does it force your hand, even if there may be data that could make the argument the other way?
That ECB news conference might get interesting and Lisa might watch it. Maybe.
I might.
You're going to tune in for the next one, Lisa.
You know, I think I will watch this one. I think this is actually going to be really interesting because if you have inflation, but you have a slowing economy, what do you do? This is unheard of over the past 2 decades. What's the roadmap for this at a time when oil prices don't seem to be subsiding?
The euro, negative once again, this time by a little more than 1/10%. The Nasdaq 100, -2, down a little more than 1/10%. On the S&P 500, -0.4%. In the bond market, yields are higher on 10s by 4 basis points to 183.91 from New York City. With Katie Lyons and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. In the UK, a government investigation into pandemic parties in Prime Minister Boris Johnson's office could be stripped of key details at the request of police. They're conducting their own investigation. A watered-down probe could be helpful for Johnson. He's trying to persuade his Conservative Party colleagues not to mount a leadership challenge. The European Union and the UK reportedly are gearing up to sanction new Russian gas projects if there's an attack on Ukraine. That's according to the Financial Times. The sanctions would drastically cut financing and technology transfers for gas facilities. And China and Russia will sign an agreement to build a research station on the moon. The two countries aim to complete basic infrastructure construction for the lunar station by 2035. It's the latest sign that the new race to go to the moon is heating up. Next month, the US has scheduled a major test of its Artemis program. That's an effort to return astronauts to the moon later this decade. And Toyota finished out 2021 as the world's top-selling automaker again. The Japanese automaker was able to keep production mostly on track despite a year of those supply chain turmoil. Toyota and its subsidiaries sold 10.5 million vehicles, a 10% increase, while Volkswagen sold 8.9 million. And H&M CEO wants to double the Swedish fast fashion retailer's sales by 2030. Helena Helmersson also wants an operating margin of more than 10% within 3 years. She's already reduced discounts and helped lower H&M's long-standing inventory buildup. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.